We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day. As always, we're doing a live stream today. We're waiting on our guest speaker. He'll be here, I guess, in a second. I think he's running late. Okay, no, he had an emergency. He just texted me, so he's going to be about 20 minutes late. So we'll kind of talk about some of the topics, but I don't want to get into everything because I do want to have Jay here talk to us about some of the things that he wanted to talk about. So I have both things open here. Let me just quickly test making sure everything is working. So we have the chat feature bringing up. Okay, hold on. Let me see if it works now. And then let's see here. We're going to put up a random stock that we might. I didn't put this in the description of what we're going to be talking about, but I guess we can talk about it a little bit. So here we go. Desktop. And we got a black screen, Windows. Okay, there we go. Cancel. So now it's working. And chat. Let me see if chat works. All right, chat's refusing to work right now. Hold on. I'm gonna have to restart the chat widget. All right, I'm gonna restart the chat widget. It is what it is. We have to do what we gotta do. That way I can bring your chats up. There we go. Boom. All right, so that's working. Okay, so if you guys see this right in front of you, we have Disney stock. Disney collapsed, not collapsed. I'm using funny words now, but it fell by 13.16% after they reported worse than expected earnings. I would say that they were fairly disappointing. I think from the terms of revenue growth, they were expecting much more revenue growth, but that revenue growth comes under the context of a recovery. So let me see, what is that? All right, hold on. I just realized. Got out of the shower before coming here. All right. Is he capping on BlackRock? Yeah. So Fuhat, BlackRock did report. I know that you love BlackRock. But we already talked about BlackRock in the community. We had a live stream in the Discord with BlackRock, so we already talked about it, Fuhat. Because I know Fuhat, I saw your comment in the newest video talking about what about BlackRock. Is that a Fly Floridian shirt? I don't know. It's Banana Republic, I think, but that's about it. All right. Anyways, going over some other things. BurgerFi SZN coming soon. I don't know what the SZN, maybe I'm reading that. Oh, it's you big pharma show. Do the roar. Not today. All right, let's see here. The government will never let the crypto be a thing. Okay, we're talking about crypto. So I imagine some of you have seen my crypto video already. I guess part of the series of the crypto brokerages, every time we're talking about it, it's a crypto brokerage and they're about to collapse or they're collapsing. So the crypto broker video, I just posted it. It's about FTX, kind of going over the debacle. I thought I did I not cover the liquidity issue? Because there was a comment saying something I did cover. So it's actually funny. I think it's from, well, I won't say their name, but anyways, so FTX, a lot of their assets were, we'll wait for the crux of this when Jay gets here, but a lot of the assets were basically FTX token or held up in a bunch of projects that weren't easily accessible to the parent firm. They couldn't just liquidate immediately. And that serves a bit of a problem when we're in the midst of a liquidity crunch. And by the way, I saw some of your comments that someone's using liquidity crunch, but I think I saw the tweet from the Binance guy using the word liquidity crunch, so it could be that. I have no idea. So yeah, but anyways, going back to Disney, because we'll wait for Jay to come on for us to talk about that, and I'll tell him to text me real quick. You're ready, and I'll call you. Okay, because we'll do it via Discord or something like that. But anyways, so Walt Disney what I'm gonna be expecting to see here is, and I'm already kind of starting to see that, is people talking about how the content's really bad, how this and that is all really bad about Disney, but no one was really, I don't know. There were some, but not many people were talking bad about Disney when it was at much, much higher prices. And I have videos on Disney. You can go check them out on the Capital Mindset channel, and they weren't very positive. And even when it was at 90, still wasn't positive, because I was asked in a live stream. I think I was even on Echoes' live stream when he wanted to interview me. He asked me about Disney towards the end. Did not like Disney. But anyways, Will P, it is not alcohol mindset today, but we can have a day. Wait, hold on. I just realized I'm floating here. Let me move myself down there. Bad parks. Okay, so that might be a reason why. I mean, given my geography, it can be understandable that one might get exhausted or tired, with the parks. But yeah, I can understand that. Mine, so you're clipping on green screen. I don't think I'm clipping me personally. I mean, I might be, but that's just the capabilities of the camera, I guess. Capital Mindset recommended good burn. Okay, man's gone. And then, yeah, Jay's coming. Yeah, dude, Disney. Oh, Echoes, you're here. Yeah, Disney earnings were bad. Can't even lie. Okay, but yeah, now I think people are going to dogpile on Disney, though. So, Disney, historically speaking, but the thing is, one other thing that I talked about in, I think it was the Disney video, I think it was the first Disney video, but for sure the second Disney video, I think, or in both Disney videos for sure, on the debt profile of Disney, actually changing the company itself. So the Disney that you're investing in today is a very different Disney than one you're investing in from, let's say, 2018. What is, of course, different and maybe more positive is their reach with Disney Plus and their suite of apps that they now have. Now, Disney's media business, the thing is that they kind of are at risk in some ways of cannibalizing themselves, because they're already really huge in media. And so it's not really going to experience, well, to my, the way I'm thinking about it, their advertising division is perhaps what's at risk of cannibalization. It's just more like a transition of how they're sourcing that revenue more than anything. So it's a bit problematic. Whereas Netflix kind of getting a whole new option it's kind of not. They weren't previously advertising on their platform, and now that they are, that's like a whole other business line, a whole other way for new customers to come on and potentially experience their content. So also with Disney, they kind of count the total growth, which I understand, because you want to count ESPN Plus, which is a very good asset that they have, as well as Disney Plus. Now, as far as the content goes, my personal opinion is that Disney's content is subpar, but I think depending on what you're looking for, if you're looking for maybe more popcorn flicks or things for the kids, well, Disney's good for you. They have Pixar, which has probably one of the best family animation studios in the United States, but they're more adult entertainment, stuff that geared towards, well, no, Star Wars is geared towards kids as well. It's more like all ages. But Star Wars is, I feel like well, actually, no, I've heard good things about Andor. Andor, I've heard really good things, but I don't know. I feel like they've really harmed the rest of their assets. So, but it's one of the companies, honestly, that can kind of get away with that. People seemingly don't care too much, and they kind of just consume it. Very similar to like the Nintendo audience base. So Nintendo and Disney are two of the companies. I think I said this in the Disney videos. Nintendo and Disney are two of the companies where their customer base is fervent, loyal, almost cult-like. So they'll pretty much buy anything. But yeah, okay, Echo says Ando's is a good show. Yeah, you see, that's the unfortunate thing, because I've been hearing that show is actually really good. It's just, it has the rest of the baggage that the rest of Star Wars now has from Disney Star Wars. So, it is what it is. Now, I did cover over the Warner Brothers Discovery earnings within the Discord. And one of the things we talked about and I showcased is more of the data of what shows are really doing good right now and what shows are not doing good right now, or what shows are basically making to the top. Netflix is still dominating. I think they have 7 out of the top 10, if not 8 out of the top 10. I'm pretty sure it was 7. I believe what made it into the top 10 was it was 7. One of them was a TV show from Apple. The number 1 was Netflix. Number 2 was Apple. Number 3 and number 4 were HBO Max and Amazon with Rings of Power and House of Dragon. And then the remaining ones were all Netflix shows. And then not a single Disney show was on there. So, I don't know. That's all I'll say on there. So, Eddie Rivera, what terminologies have they started to use? Because that's actually interesting. I mean, that's why I used specific terminology. So let me know what they have been. And everyone else, let me know if you guys have been noticing the same things, what Eddie is saying, which is interesting because I thought they wouldn't watch this. I feel like this content may be too long or too boring for them. So let's see here. Capital Mindset. Would you react to Chamath from All in the podcast on Meta spending on VR? He used to work. We actually did talk about that already within the Discord community. Pretty much what happens, by the way, is we kind of made it a thing where we spend, or at least some of the members are spending nearly all day listening together into earnings calls, and then we'll have it playing, and I'll have it playing in the background, and then we'll talk about it right after. I either decide to film it or not decide to film it, but we've been doing that a lot. And then one of the things we did end up seeing was Chamath's reactions to Meta. And what we found out, or what we found interesting, was for someone who perhaps is expected to look at the numbers, he didn't look at the numbers, and he stated some things about spending statistics that even the company never said, kind of jumping the gun there and going off of what I guess just the general crowd was saying were the spending figures for whatever. Yeah, whatever. It is what it is there. Now, one thing I'll tell you guys, I have now reduced my Meta cost basis to about $98. Those of you, again, in the Discord community, you guys saw my new cost basis, which is pretty crazy, and goes to show you the change that's been happening. So the amount of capital now allocated to Meta. And now today we had this massive run-up. We've had a massive run-up in the past couple days. In the past 5 days, Meta's had a nice little jolt up. So high compared to Meta's spending in Apollo project and Manhattan. Yeah, so Apprentice Co. So it's not really what it seems. We looked at it. It's Chamath, man. I mean, he's trying to move with the whims of the crowd there, and his podcast is meant to be mass consumed. So you're gonna get what you get there. Now their experience isn't. I'm not saying that they don't have experience, but it's not his best work, I would say. That's all I would say. Jimmy from Learn to Invest also acknowledged and liked that 80% CapEx was from the family of apps. Yeah, you see? Okay, so that's good that he at least looked at them. That's at the bare minimum that someone can do. I was seeing a lot of larger creators do this. I saw that, what's his name? You guys love his name. You guys make fun of the last name. Joseph, I saw him because you guys sent that one to me. I saw another one you guys sent to me. Who was the other one? I think it was Steven Van Meter. You guys liked that one a lot. And we're kind of just laughing because it was like a doom and gloom. But he's more of a macro guy, and he started commenting on like Meta. And when I took the time to look at it, because he's the bond king, of course. And so, I don't know. I felt like it was also kind of not representing it pretty well. But I don't want to defend Meta on everything. That's not what this channel is. Meta's not what this channel is about. It just so happens to be one of the investments at the present moment in time. I did make a video that's going to be coming out finally on ASPS. If you guys haven't seen that company, so it's been in the portfolio for a while, and I think one of the subscribers, you've been following this company for a long time. You've also been a long-time subscriber. You know who you are. And I saw that you commented on the video, on the old video. It's funny because back in those days, we had only about 200 views per video. And so this company has returned about 140% since we acquired it in 2021. We, I mean me, but we back then, it was Austin and I doing the show. So those videos, those were the older videos, different kind of intro music, very terrible production quality. But no, it was a really, really good investment. And most of the gains, well, not most of them, but a decent chunk of the gains have actually been in the past 5 days. I go over why in the video, and we talked about it as a community, why some of the gains don't make too much sense. And actually, a lot of the health of the company could be brought up into question. And this is when we start to perhaps think about exiting the door or looking for the exit, at least in some portion of the position. So while we were buying when everyone hated it, now it's seemingly more liked. This is not like a retail stock. And by the way, don't even bother. Don't get involved with it. Just kind of watch, be along for the ride or the show, so to speak. But it's a good case study, a company that many people don't really know about, didn't really talk about. And it's performed well. Really happy with the performance. I am currently up about 140+%. But you guys have seen those from all the portfolio updates. I would showcase it, and I wouldn't make a video on it. But now I did, because now I'm basically at the end of its lifespan, perhaps. And so I'm going to be talking about that and, again, my thoughts on like why I might be wanting to sell it. So maybe that's going to provide value. Will P, you said, I got into ASPS because Jake Bro was pumping. Oh, he was pumping. Yeah, you see, like, yeah. I wouldn't, if I was a much larger YouTube channel, well, you see, like, I didn't, and I'm not even that big. I'm like 3K subscribers, even though reasonably I could say that I probably wouldn't affect it. So told last year crypto is going to solve inflation one way or another. Told you all last year. That's a good one. That's a good one. Disney's hitting your buy point. What's your buy point, P. Morton? Bubbleson, yeah. Well, what's funny is because as soon as he turned bearish on the stock, it actually rose up. So he's kind of like a Jim Cramer, because I think he did like a Estee Lauder. He got out of Domino's Pizza, got into Estee Lauder. By the way, I know that some of you do comment on his videos, and he calls you guys hindsight capital. Even though I know that you guys have been commenting on his videos for a very long time, basically trying to warn him. So you guys are hindsight capital. Welcome to the hindsight capital community, I guess. And it is what it is on that. So let's see here. Let me make sure. Jake Bro also pumped HCI group. That blew up in his face like QQQ short. Yeah, I mean, like, sometimes if you're wrong on a lot of things, you can get one thing that's right. That's fair enough. I got into AS. Okay. Hey, man, what do you think about international stocks and shareholder equity? Seems like there's a lot of value internationally. For example, Samsung, Asus. Okay, so very good ones to bring up. So one, you got to probably start or come to the conversation understanding the business culture in various countries and how that might relate to you as a shareholder. Because if you're a Westerner, it's often easy to just apply a Western normative narrative. And let me actually rephrase that term Westerner, American narrative, to the business culture of another nation. So it really does depend. So for example, Japanese and Korean business culture is going to be a bit different. We actually just did as a community, we looked at the Samsung earnings call, and then we talked about it afterwards. I think the general consensus after we did that was it was a terrible earnings call, and in fact it was very uninformative, disorganized, just very unappealing as an investor to really even listen to. But aside from that, it does seem that they have issues in different lines of businesses. It just seems like a huge beefy conglomerate that it has like a broad direction that just goes in. It doesn't have anything that it's specialized and it's amazing at. So it definitely has businesses in there that it excels at. That's not what I'm saying, but it's not going to be like calling it the Apple of whatever is probably not very accurate. It's just a huge conglomerate that does basically everything, and you'll get what you get with that. I didn't even bring up your comment, so let me keep it up here so I don't lose it. And then we also talked about, well, we haven't talked about ASOS. Honda, car companies tend to be ugly. ASOS is that value play that a lot of people seemingly liked back in the day when I covered it. I don't even know what it's done recently. So let me it's probably down since I last covered it. So actually, let me get the dollar one, because that's how I know for a sense of, okay, so ASOS, it 100% is down. 100% is down from when, yes, yeah, it's a lot down. So you can go back and check out the videos I had on ASOS, and there were some issues I had with the company. So I refer back to those videos because I guarantee you the information really hasn't changed all that much. When I try to make a video, I hope that the video is still relevant a couple months from now. Of course, new things can happen with the company, and then I will have to update. But a lot of people ask for updates, and I say, well, there's not much to update. I know that I could just farm views and just do update. But if there's not something meaningful to update, I don't feel the desire to update. I'll just tell you, we'll go back to that video. I know that YouTube actually changed something from my understanding. It makes it a little bit more difficult for you guys to do that. So what I'll do is I will try my best. I can't promise this, but if I find time this weekend, I'll update the YouTube library just for you guys who want to go back and check out all the videos. The YouTube library still works for you guys who have access to that Google Sheet. It just doesn't have a lot of the newer videos, and so I'll add some of the newer videos to it. It might take me a while to actually get that done, but hopefully in doing so, that gives you an easy way to reference all the videos by topic, organized by topic and by date. Because I want it to be easy for you guys to find older content. And if you say, okay, I want to know what you said about this. Okay, well, you go there, you go to the date, and it's organized by date on what I said. And you can even follow along and see if anything's evolved over time. So for example, right now, I think if you go on there, they're not all on there, but a huge amount of VIE structure videos are on there where I basically go over, cases, Chinese court cases, previous scandals in Chinese VIE laws, let's say, or regarding like foreign investors like Yahoo and SoftBank. So I have many, many, many hour-long videos. And in fact, when this whole China fiasco blew up again, a lot of people within the Discord community were fairly new to the channel. And, they were like, okay, well, where can I find this content? So I had to, send them over to those videos because I was like, the best way to explain it to you is, just go watch this hour, 30-minute video where I walk you through everything. And then if you're still not satisfied with that, there's another 40-minute video. And then there's a video where I go over like a Q&A of the comments that I received in the other video. And so I try to do as much of that as possible if I think it, just adds value. Anyways, so, Fuhat, you just up, okay. It's not effing updated. Yeah, you want to help me? Okay. I mean, I'll take some help. It shouldn't, if with two people, it shouldn't take too long because all you got to do is just hyperlink it. And then you type in the date and then you put in the link in there and then boom, it's done. And we would do that for every single video and we're done. Okay. So George Costanza is asking question. Okay. Wait, I got a 72, 75 for Disney. Okay. That's reasonable. I haven't looked at Disney in a while. And so that he's referring to the collapse in Disney, the impending doom of Disney. I got to make sure my phone so I don't, just in case Jay messages me. Let's see what else. I see a lot of positive shareholder value internationally. Okay, so yeah, going back to your question, yeah, a lot of international stocks, they appear cheap right now, and they are cheap. So there are some stocks, for example, in Poland that appear cheap, and some of the members in the community have been talking about that. So one of the things that's interesting about Polish stocks is they tend to pay a high dividend, and so that might be something you need to know or should know before you get involved. Why is that? Well, understanding the business culture. So Polish people don't really trust the businesses to hold on to a lot of the cash, so they prefer that the companies pay a lot of dividends. So understanding that is kind of important if you're going to go invest in that country, right? So that's an example of something you might want to do. Understanding the business culture of a country like Brazil, for example, try your best to do that and understand that investing internationally, you as a, let's say, it's not to offend anyone, but as an amateur in that nation, you have to understand that carries an extra amount of risk. And also consider currency risk in your investment. So if you're European investing in the United States, well, right now the dollar rising to the euro has benefited your returns nominally to your currency. As an American investing in the European markets, it would have harmed you nominally because the dollar has appreciated. And then also consider where each company does business. So for example, an international company doing business in the United States, right now it's been a tailwind, but an American business doing business internationally, it's been a headwind. So for example, we have Alphabet. Alphabet without cross-currency headwinds, they actually grew by 11%, but including currency, they grew by only 6%. Meta declined in sales when you consider currency. When you exclude for currency, they grew by 2%. So you see, these are things that you have to think about in addition when you're kind of investing internationally. Not just the law, et cetera, and all that, and the business culture. Okay, here we go. Okay, so he's ready, and I'm going to bring him on. So you're going to bear with me on the quick change. What I have to do is bring on, let's see, where are you at? I'm going to put you guys here temporarily, like this, and I'm going to get Jay ready in the background. So let me call him, do a video call, and then I'm going to turn off my camera, And then let's do that and then turn on this. Okay. You can still hear me with the audio, but let's see if this works. If this doesn't work, I'll figure out a unique way of doing it, and Jay will just have to see me. Actually, for now, I'll just keep my camera on like this, and if anything, if worse comes to worse, I'll just do it the other way. Okay, so let me text him that I'm calling him. All right. While we're waiting for Jay, I'll answer some more questions. I got to DRNK. We go made it my home and fight. Okay, wait, there's more questions about ASOS. So I feel ASOS, Honda, and Warner Brothers Discovery have twice as much shareholder equity as the market cap, which has thrown me off. Okay, so let's go over, for example, Warner Brothers Discovery. You're saying you meant Warner Brothers Discovery or another company? Because I can check out Warner Brothers Discovery. I didn't think they did. Shareholder equity. So on the balance sheet, we're going to see a higher portion of equity than, I'm pretty sure they have a huge liability section. I mean, we can see, but that shouldn't. I'd be cautious on that as a measure. But let me see real quick. I haven't seen their. Well, I don't remember it. It's not that I haven't seen it. I actually just saw it, but hold on. He's texting me at the same time. All right, so he's gonna figure that out, and then he's gonna come on. Okay, so let's see this. Balance sheet. And let me actually let me use the SEC filings. Yeah, Warner Brothers Discovery has like $48 billion in equity versus $24 billion market cap. Maybe you mean assets. I think that's assets, not shareholders' equity. I could be wrong. I got to check it out again. Let me pull up the 10Q. So here we go. Here we go. All right, so I'm going to share my screen again. And wait, I got to actually... wait, let's go here, and let's bring you over here. All right, cool. So let's go to the balance sheet. Yeah, because I don't remember that being the case. Current liabilities, shareholders' equity, additional paid-in capital, treasury stock, retained earnings, shareholder equity. Oh, no, you're right. That's wild. Oh, okay. Well. The reason why, well, first of all, if you know, equity, shareholders' equity is just assets minus liabilities, because equity plus liabilities should equal, equity plus liabilities equals assets. Assets is equal to the summation of the two. So keep that in mind. And a lot of these assets are intangibles. So you probably want to focus on like something like if you're calculating book value, for example, for this company, careful about that book value and careful about that tangible book value, because, you know, it is a company with a lot of intangible assets. So it's not like they have no value whatsoever. It's not like they have maybe the same value what they say. It's maybe somewhere in between of that. So yeah, I wouldn't use that as a metric for this company, but okay, no, you're right. It has a huge amount. But again, when you consider that, what do I have to do? No, you just have to go on Discord. On Discord. Last time. All right, and then I'm gonna call him again because I think he's on here, but. All right. Anyways, while we're waiting for Jay to get ready there, at any moment he'd be coming on here, and then let me make sure the desktop audio is on for him, so when he comes on, you guys can hear him immediately. Okay. So we have some. Hold on, I have to update that. Update that. I don't know what causes it, but the this widget, it does this here and there. There will be times. Does that work on it? Okay, so now I have to find it this way. Dang, everyone's having technical difficulties. Jay's having technical difficulties getting on here. Okay, so let's go here. Let's go live here. And then let's go to this. And I need to get you, copy, paste. And then Jay's asked me a question. Okay, he's in. All right, Jay, you're in Discord. All right. Can you hear me? Oh, he can't hear me. All right, trying again with you, Jay. All right, anyways. He's calling me. Hey, Jay, what's up? You're in Discord? Are you getting my call? Your account? No? You should be getting, yeah, go through like your chats. You should see me. And then you just, yeah, not the actual server. If we go, we can talk about that when you get on here. All right. So if you're on there, I just have to click this and it calls you. You should be getting like a call, like a ping right now. Do you see that? Uh-huh. No, there's supposed to be like a private chat here. I'm gonna private message you. Do you see me? I just private message you. Yes, there. Oh, restart it. Maybe you gotta restart it. Everyone's. Yeah, let me exit. I'm gonna No, I think in the chat they're already calling you out for it. Oh, wait, let me take away the mic just in case. Oh, that sucks. Damn. Mm. Dang. Well, I'll talk to him. I'll message him or something because that sucks. Wait, it says you're on. Are you getting my call? Uh-huh. Yeah, just answer the call. You answered the call? Yeah. Ki- No. That you're in. No, that's no, that's the Discord server. Yes, there you go. That's where you're supposed to be. So I'm gonna do it again. There we go. Boom. Oh, we are in. All right. All right. Oh my gosh. All right, hold on. Let me switch you over to my headphones so we don't get feedback. That was a journey. That.
I'm distracted, man.
All right. So here, turn on your camera,
I'm
and
mad.
then everyone else can see you. What I would do for you. Hmm?
Oh, here's the problem, I think. I think the problem is I left OBS software on.
That's what would do it. You left OBS on? Yeah, that would
Yeah.
totally do it. OBS
That's
and
that was the problem.
Discord
Dude, I
for
was
class.
distracted. Bro, I just spent 45 minutes on the phone with Nate.
Damn, man. Yeah, he's having his thing.
Can you see me?
We can't see you now, so what you're gonna have to do, this is what you have to do. If your camera was on OBS, you're gonna have to close Discord and you have to come back on here. Yeah, you gotta restart the call. Okay, let's see. All right, you're back. And now turn on your mic and your camera and you should be good.
Yeah, is everything good?
So let me go camera on. Turn on your camera.
There's no fucking button.
Here.
Video, turn on camera.
There we go.
There we go.
You did it. You did it.
Allow. There we go.
All right, cool. Now we're good. All right, so what I would do on your end is put like the live stream on, and then you can see me, and then they can see.
What do you mean? Put the live stream on?
So the live stream that we're currently on, just put it on to the side if you want to see me. If not, I'm just a voice to you.
Oh, okay. So
because my camera is through the streaming software. One day when they figure out how to
I can see your capital mind. I can see your capital mindset thing.
Yeah, that's what you should use. Just use that.
Okay.
And then you can see me. Okay, and I have the latency.
The only thing I can see from you is your capital mindset symbol.
Yeah. On Discord, that's all you're gonna be able to see.
Okay.
Because right now the streaming software is clashing with, Discord. Okay, so.
All right.
We have a couple topics to go over.
Okay.
Okay.
Is one of them where I found the fraud in Enron's 10K?
Yes, that's actually the second topic, Enron fraud. So we have FTX bankruptcy, Enron fraud, meta update. Oh, I thought I put strongman in here. No, strong portfolio performance. I was like strong, and I was like portfolio performance. I was like, oh, okay. So let me make sure that the widgets are all up to date. So this is basically the true start of the live stream, everyone. This is the true start. Up until now, it has just been me just like answering your questions. So let's start. FTX.
I apologize to the viewers. I am technologically retarded, and I keep telling everybody that, but then they expect me to know shit. My brain doesn't work like that. It works on dick jokes and whether a stock is overvalued. It doesn't work on technology.
Yeah, there's things we can do and things we cannot. Okay, so how do you feel about the FTX bankruptcy? I talked about it a little bit, but let's have a discussion about that. Have you seen that? Crazy stuff.
Yeah, and then so Binance came out today too, and they said they're not going to bail them out.
Yeah.
Because what they said was there was a black hole in their balance sheet. And I go, yeah. Because crypto is not an investment. I don't know why we're even arguing about this.
I mean, so everyone had this allure that FTX was the one that was always well capitalized. And I think up until the end, they said, well, we have about, $10 billion in assets. We're good to go. So it was totally a bluff in the end. And they're kind of just doing a Hail Mary, seeing if someone were to maybe ignore it. And let's say Binance were to save them. But in the end, okay, Binance at least did their due diligence. And did you know that the two guys, they have a rivalry? The Freed and the CEO of Binance, whatever his name is, they have a kind of like a clash going on. And one thing that was interesting is the moment that there was like this rumors / leak that they didn't have what they said they had, Binance, which had about, I think the number was 2.1 billion FTX token, they dumped it into the market and collapsed the coin overnight. That probably with the momentum and everyone freaking out caused the coin to collapse. And then with that, the value that was held on their books, those assets that were held on their books. So tip the hat over to that guy. That's some 4D chess.
Yeah, but I mean, what I'm saying to people is you're putting things on the balance sheet as assets that don't produce cash flow for you. They don't produce anything. You know, my whole thing about the crypto was I just kind of tuned out after a while because I knew that it was inevitable, right? I don't understand crypto on the level that a lot of other people do. I'll just flat admit that. But here's the problem with all of this, and it's something I go back to in the beginning. If you're telling me crypto's the future, I'm asking you which one, because the vast majority of them will fail. And that's the problem with these companies like Coinbase, FTX, any of them. You're counting things that are not assets as assets.
Whoa. Coinbase is the safe one, bro.
Yeah, it's the safe one till the entire crypto market collapses, which, I mean, this is a thing that's coming that people aren't understanding. Crypto is going to be the first thing that people sell when they really start to get into financial trouble.
Yeah, in the case of a liquidity crunch, that's the worst kind of asset you would want to own. But
you know, like when we talk about stocks, right?
Sorry to interrupt you. This is actually breaking that we found out. Yahoo Finance. This is out for you, JP, because you posted this in the Discord community. I want to just take your hot take. Hot take. You have no preparation for this. Yahoo Finance brought a financial analyst on to talk about crypto. We can watch it, by the way. I can bring it up. Guess who it was?
You got to bring it up. I got to see what this clown has to say.
Oh, I'm not even going to tell you who it is. That's the best part. So some people already know. So I'm gonna.
Is it Michael Saylor?
No. You can't. That's spoiling things now. Now the community might already know, but I want your raw reaction on this. This is beautiful. This is another level. All right, I got to get the link. We're gonna copy the link here. So what I would do, by
Fabio,
the way,
just so you know, right? Think about this. We might lose connection. Also, the hurricane's supposed to start coming on shore soon. It's going to hit both of us.
Oh, I didn't even realize. I forgot. Okay, so
right?
I forgot. Florida.
Yeah, we're about to get hit by a hurricane.
Oh, okay, fun. Yeah, I'm excited then. All right, so if we lose connection, great. That's anything for the audience. We'll go outside. We'll be Anderson Cooper with just like, all right, Jay, what do you think?
Can you imagine I'm in a hurricane doing a breaking down the intrinsic value of a stock, like right in the middle of it, like writing on my whiteboard as it just gets picked up and used as a missile, and hopefully, slams into Anderson Cooper, so I don't have to hear any more propaganda.
Jay, are you able to see this?
Yeah, who's coming in?
No. Watch that. That's a stream, so that's so you can follow along. And then we're going to watch this together. And then I would mute me on the live stream so you're making sure you don't hear this twice, but just so you can follow along, and then the audience can see this with us. But this is the financial analyst. It's 5 minutes long. I'm not going to tell you who it is. Everyone in the audience, if you know who it is, please don't spoil it for Jay. Let Jay figure it out all on his own. All right, here we go.
I might not figure it out. I started drinking, but...
Crypto continuing its sell-off with Bitcoin down below 17,000. That's as Binance is reportedly likely to walk away from its offer to acquire FTX. Well, joining us now is Kevin Paffrath, a financial analyst who follows Bitcoin on his popular YouTube channel, Meet Kevin. So, Kevin, how expected was this demise when it comes to FTX?
This was actually a total blindside. You have to remember this. Sam Bankman-Fried, the founder of FTX, he was considered the Jerome Powell of the crypto market. He was the guy who was just in a deal trying to buy Voyager Digital, the Canadian company that went bankrupt a few months ago. He was the guy investing in Robinhood when it was $7 per share, which it's almost back to that level. He was the guy doling out money everywhere, and all of a sudden, the emperor has no clothes. It's really scary and super unexpected.
Pause that for a second.
Here, I'm also trying to figure out how to make it so that you can come on screen. But keep going.
I don't get it. I don't get why people listen to people like this. I don't get it. Why is this guy Meet Kevin. Do I hate him? No, but I mean, he's demonstrated numerous times that he doesn't understand what he's talking about. I mean, I've done entire videos on stuff like Peloton. So, I mean, all you have to do is look at his stock predictions, and you can tell this guy either A, doesn't care, and it's all about the money, or B, doesn't know what he's talking about. Either way, it's just as bad. I don't understand why when Kevin says this caught everybody off guard, did it? Because the Ryu rabble has been telling you this is going to happen for 2 years.
Well, I'm hacking the system.
None of us in the Ryu rabble are geniuses. Sorry, I'll just throw it out there. I mean, all you need is a basic understanding. Crypto doesn't produce anything. So you're surprised when there's 20,000 coins, you don't know which one's going to be around, if it's going to be around in 10 years. And then everything starts to collapse when the Fed raises interest rates, and you're surprised people are selling out of crypto. It's clown world.
But aren't you listening to the analyst explain it all? I mean, this is a crypto analyst now.
Yeah, and I'm not a crypto analyst, and
Yeah.
I'm telling you he's wrong.
But Yahoo Finance said he's a crypto analyst. So
Bro, I'm about to do a video where I tear down Sven Carlin for even suggesting that Amazon is a buy at its current prices, and how stupid that is.
we'll talk about Sven, I guess.
Yeah, it's still clown world out there. And people that know better are still getting caught up in clown world.
Well, the Sven thing, I'll be in the spirit of Cole and Chris on that one. I'll be their avatars for the Sven debate. But we'll continue with this because
does appear to have no close.
Yeah,
to see
no,
him
I
again.
don't-
So he went from Jerome Powell. Is he honestly Bernie Madoff? And what's the fallout from this?
Oh boy, there are a lot of comparisons, unfortunately, to Ponzi schemes in the crypto world. In fact, even Sam Bankman-Fried himself has reference to some of what happens in the world of crypto as a Ponzi. So yeah, a lot of references to Bernie, and it doesn't help that companies like Binance are registered out in the Cayman Islands. You don't know who owns them. Anyone who's ever tried to sue Binance has ended up giving up on their lawsuit because you can't even figure out who owns these companies. So what's the fallout here? Well, I think Binance probably smart from walking away from the FTX deal. I think they'll take a multi-billion-dollar loss trying to bail out FTX. That could lead, unfortunately, though, to more liquidations. We don't know how bad those will get, but if we see large liquidations because of an FTX bankruptcy, that could move over to the US FTX version, since they have the international wing and the US version. And then ultimately, if prices got low enough, you could even see, I hate to say it, but you could see a company like even Binance go under, and that's the last leg standing.
I mean, so what do you think that Binance saw when they looked under the hood
Hey,
at
pause that
FTX?
for a
And when you
second.
do have so much
Here's what I'm going to say about Binance. And when Kevin's talking about it might go under, here's what I'm going to tell you. It's more likely than not that Binance won't be here in 10 years.
Yeah, I agree with that. Yeah, I'd agree with that. No, but someone's pointing this out. So Michael is saying he was pumping FTX referrals all year long. All these YouTubers, I said this in my most recent video, just remember, don't have a short memory, guys. As a YouTube community, whatever person you decide to watch a lot, just keep that in the back of your mind, who was doing it.
Yeah,
that.
I mean, this is the thing that people have to keep in mind. All right. There is a difference. And I'm going to defend Paul from Everything Money for a hot second, even though he does a lot of things I disagree with. There is a huge difference between being wrong on Intel or whatever stock you want to throw out there, right? We'll just, whatever it is. We could throw out Tesla. We could throw out Netflix. Ultimately, it's all going to come back to the same place. if you're looking at the underlying fundamentals and you come to a different conclusion that I come to, we just disagree. And if you get a quality stock wrong, I actually don't question what you know. It's when you're telling me things like crypto is an actual investment and all of this stuff that people are saying with unprofitable share diluting trash that I just look at you and I go, your opinions are based on not knowing anything or you're just lying at this point. It's the same thing with FTX and Meet Kevin. Okay, he's been taking whatever it is he was taking all year, and it was a cash grab, and he screwed over his fans, and yet they still listen to him. I don't get it.
And now he's featured on Yahoo Finance. So.
Yeah, I mean, listen, Jim Cramer is still around 20 years later.
Yeah.
Jim Cramer has clown opinions on stocks.
Same with Kathy Wood. People forget. She's been around.
Yep.
She's been around.
You were the one that broke it down to me because I didn't know she had the past.
Yes. Yeah, she's like, yeah, and like, you know, I wasn't obviously like around those times, but I feel like if you're young, you gotta substitute that with, you know, healthy dose of like, I don't know. Like if she's getting a lot of headlines or someone's getting a lot of headlines, maybe it's like, okay, what have they done in the past? What is their past work? And I found, you know, she's been in the game for a while. She's had
bro. It comes down to this, right? We'll just use a quality company. You know, I don't like the streamers, right?
Yeah.
Somebody telling me to buy Netflix, I'm gonna look at him and go, yeah, kind of not really for me. I see your point. But yeah, that's not a stock I want to buy. I don't question what you know. We just disagree about a stock. I'm really going to start questioning you when you look at the underlying fundamentals and I go, this company doesn't produce any cash flows. It's unprofitable. It's diluting the shareholder. And that's what all of these crypto companies are doing. It's like to the point where I don't even really think you need to look at the underlying fundamentals to tell you that the vast majority of these crypto exchanges are going to go under.
Yeah. I would say that I'll do you one better for the Netflix thing. Don't buy it now.
No, I threw that out there. It's like, okay, so you and I might disagree on the fair value of a stock if we're both looking at the same numbers. The only thing that's going to tell us who's right is time, right? So if I look at a company, and that's why I brought up Netflix, and I just go, all right, yeah, I think there's virtually nil chance of this going to zero in the next, 5 or 10 years, whatever you pull out. There's a huge difference between that and, again, these unprofitable share diluting trash companies. It's like we just disagree on a quality stock. We don't know what it's going to do. You bought it, I didn't. We'll know in 5 years whether it was a good investment. But I mean, it goes to, I don't understand how you're not seeing things like Tattooed Chef or Coinbase are bad bets, probably.
Take a look at the current comment on the live stream right now. It's from Sam Veers. He said, Capital Mindset, Lafufu read the script for FTX ads and said Sam Bankman-Fried or whatever was trustworthy and is charitable. So bad.
Well, bro, this is what I'm going to say. I don't trust anybody, man. I'm looking at the underlying fundamentals. When it comes to money, it doesn't matter if you're my best friend. If I look at the underlying fundamentals and I don't like them, I'm not giving you money.
Yeah. And I don't know. It's testy. I already said my opinions on the whole sponsorship of FTX thing, but it's ugly.
No, I agree with you. You're taking money to screw people over.
Yeah.
I mean, listen, we've been through the clown market, right? And we still are in the clown market, but it just becomes a certain point. Go and look at Meet Kevin's track record. Go and look at Jeremy's track record. What they're telling you to buy oftentimes is unprofitable, share diluting trash. And what we've been saying the whole time is put your money in index funds and buy a stock when it's so obvious that it's undervalued that I could put it in front of a person that doesn't know anything and buy it. I just, we've talked about this ad nauseum. I just don't get everybody's fascination with buying individual stocks.
Well, I mean, there is an allure to it, but in the case of those creators, they need to tell the story. They're story salesmen. That's what they are at the end of the day. So.
Yeah, no, I know. But it's amazing to me that, they go, hey, FTX is crashing. Who can we get? Oh, let's get Meet Kevin.
Well, of course, because it's the following. He has the following. He can convince it, because they did like a cost benefit analysis. They probably also, I think they kept Graham Stephan on versus the other ones because of the conversion rates that they were receiving. So they don't just keep a sponsorship because, oh, we're just charitable, we just want to give you money, because they took away the sponsorships from someone like Jeremy and other people, right? But they kept it with certain people like Joseph Carlson. They kept it with people like Graham Stephan, right? Because those guys were having the higher conversion rates. So that's more than likely why the business chose to keep those sponsors over the others. So they definitely did.
I get it. It's, for me, man, anybody who recommends putting a substantial portion of their portfolio in crypto, I don't take them serious.
Yeah.
I just don't. Like if you're telling me, you're like, look, we don't know what's going to happen with crypto. That's why I allocate 5% of my portfolio to it. I would look at you and go, it's probably a good idea, because you can if you understand the crypto market, you can probably make money on that. But I would also tell you, don't view this as an investment. View this as basically educated gambling.
Yeah.
There's nothing wrong with that. But these guys that are like Andre Jeek, that are like, half of my portfolio is in crypto. I'm like, this guy had 200 stocks in his portfolio. Why are you taking this clown serious?
Because he has good editing skills, and he's very easy to understand.
Yes, and it's very easy to understand that 90% of what he says, he's wrong about.
YouTube is a showbiz. YouTube is showbiz. It's not about that. People are maybe not understanding that a little bit. The success, the ones to get to the top on YouTube is the showbiz ones.
No, I agree with you. It's, I mean, there's also levels of this. In all honesty, I consider Meet Kevin and Jeremy probably two of the worst grifters, mostly because of their courses. Like, if Meet Kevin's opinion is crypto's an investment, I don't have a problem with him. I have a problem with you charging $500 for a course on that stupid crap.
I think it's more than that right now, by the way.
No, it's probably like 800 or 1,000. Good on him, he's getting rich, but I mean, he's basically just stealing your money because he doesn't know what he's talking about.
I don't know. I'm getting to the point where, like, to be honest, if you're silly enough to buy that, I don't know. You would have done something dumb anyway.
I'm with, bro.
You probably would have done something dumb anyway with the money.
Bro, that's why I just started doing what I wanted to do. Because I realized, nobody's going to listen to me on, guys like Meet Kevin, because they're all going to go, Well, he's got way more followers than you. So then I just stopped caring. And I was like, all right, I'm just going to talk about the finance things I want to talk about.
Yeah. I mean, well, on that note about talking about finance things we want to talk about, have you seen the update on Meta? Which first I'll bring
No,
out
this
the
is
stock price.
this is what I know. Mark Zuckerberg is laying off a significant portion of his employees. What I basically wanted to say about Meta is it illustrates the problem with central planning. Zuckerberg was convinced that, pouring all the company's money right now into metaverse was going to pay off. And that was honestly one of the catalysts on top of other things that made me not like Facebook as an investment.
Oh, the fact that they desired to make this investment regardless of anything?
Yeah. Because I'm like, my thought on the whole metaverse was that you were wasting capital from the beginning. And that it would, because because here's the thing, I just don't see Mark Zuckerberg's vision from what I've seen him put out. I just don't see that happening. That's why. It's like everybody's going to go to meetings in the metaverse. Well, I mean, there's numerous options on that. Yeah, but we have an avatar. Okay, but you're spending billions on that. It's not the most productive use for your capital.
So I have some interesting points to that. But okay, so how much capital do you think they're spending on the goggles, let's say?
Oh, I have no idea. I'd have to go look at the financial statements. I'd have to go and just dig through that to figure that out. And because I'm not really... See, here's the problem with certain stocks, and I'll tell the audience. There's certain stocks that I'm just not interested in that I really stop learning about until they come around to a price point where I'm interested. And then I go, okay, I'm going to do my research now. So, I mean, a lot of the inner workings of Facebook, I'll be honest with you, I really don't spend a lot of time on it. So you're probably more educated on it than I am.
No, fair enough, because that was the common narrative right now, and I was able to actually bring down my cost basis a lot on Meta, to the point where now I'm actually slightly positive, which is great.
I'm with you on this, man. Facebook this is what I'm going to say to you. Even though I don't like Facebook and its business model, there comes a certain point where even if I don't like the company, if it becomes cheap enough, I just look at it and I go, all right, this is just so far undervalued. It doesn't matter to me.
Yeah, it's one of those, because I don't know if, well, you probably haven't seen it, but I stopped doing the portfolio updates that I started. Well, I was going to actually get to that, and we were going to talk about that when we get to the portfolio performance. But sticking to Meta, I think the common theme around retail investors is that they're spending a crap ton on the metaverse. When you actually break down the numbers in terms of the spend, 85% of the spend is on the family of apps. And people are saying that they're spending everything on, and it's because they had to make all these other investments to build out more infrastructure, and also investments in basically let's put it simply, their algorithm, their AI, to kind of get around Apple's changes, privacy, which is very important. They can't not do that.
No, they had to fight back against that. And Zuckerberg was on the record. He knew that if he let Apple do that, Facebook would just become another app.
Yes, exactly. So that's where I saw the company really spending a lot of its attention on. And the metaverse is still technically, by the dollar standards, it's kind of like a project investment that they're doing. But I have... Bro,
here's what I'm going to say, right? Mm-hmm. If I just didn't have a little bit different strategy, I'm looking at the numbers now, I would probably go way deeper on Meta. And look, this is what I'll tell the audience. It's my opinion. Facebook right now looks like this might be a little performer for your portfolio over time. I think what's going to happen is they're going to get hit a lot harder. I don't think maximum pessimism is baked in to really anything right now. But it depends on your strategy. My strategy, max my tax advantaged accounts with low cost index funds, because that's what makes sense for me to do. And extra money gets put into my extra money portfolio. But, you know, if I was a guy who didn't have that strategy, I'm looking at Facebook right now and I would need to do more research, but the numbers look good to me. So your PE ratio is 9, your price to sales is 2.14, your PB is 2.04, price to free cash flow is 9.53, and your price to operating free cash flow is 4.67. So your price to free cash flow and your price to operating cash flow, you're not really going to get much better than what you're paying there.
Yeah, it really is another one of those where I think the sentiment has given no one should invest in it because I'm saying that, but I think the sentiment has given me a pretty decent opportunity here, and that's why
I agree.
So in the beginning of this year, there was a huge shift that occurred in my portfolio, and then now it's kind of like the second coming, a second shift, and we're at the end of the year. It just so happens it's the end of the year. So with that, well, I guess we both think Meta's good then. There's nothing to complain. But
no, I was never super negative on the company. I didn't like its business model versus how high it was trading. And it also goes to, people have to understand, you and I, and me and Chris, or whoever it is, we're probably going to have a little bit different investing philosophies. My investment philosophy is I don't want to buy a stock unless again, I'm repeating myself, but it's so obviously undervalued. I could just show it to somebody with almost no knowledge and they would go, yeah, that seems like a good buy. I got sick of doing the whole cash flow thing and I figured out a better way. And honestly, I'll just tell you what it is. It's price to book. It creates conservative numbers for you. And you don't have to worry about figuring out what you think it's going to grow at. It just eliminates a lot of the error. And here's what I'm going to tell you. It's more probable than not, if you buy under 4 times book value, you're going to have a way better time investing than if you buy outside of that.
So are you applying that to all companies?
Yeah, I do multiple different things now, and I'm going to do I'm going to create a new sheet on what certain things that a company would have to meet for me to consider buying them. One of them, and the big one is, and this is a problem I have with what a lot of people are doing where they talk about PE ratios. You're not actually going in and looking at companies like Smile Direct Club and looking whether their assets are greater than their liabilities. This is a huge problem with just buying solely on metrics, right? If you're not paying attention to that, it's probably not going to work out for you.
All right, fair enough. Whatever you do, I want you to call it the 9-pillar process.
I don't know if I have 9 pillars in there.
Make it up. Literally just add pillars. The 9-pillar
no,
process.
I'm gonna do a video on my pillars. That, you know, because it was Baba that really made me go back and question some of the things I was doing. And that's really all you can do. If you make a mistake, and everybody will, you're going to get stocks wrong. If you want to buy individual stocks, you will buy a dud.
But I feel like the Baba thing, we could have been talking about that issue ahead of time. And that was the the elephant in the
Well,
room.
I agree, but I'm in for a penny, in for a pound. Now I just want to see how it plays out because
I'm
I
with
mean,
you there,
again, it's less. Baba's less than 2% of my portfolio.
you're gonna be under a bridge at that rate. No, I'm kidding.
Yeah, I'm gonna be living in a van down by the river. You know, guys are just gonna be showing up like, "Hey, heard you need money. You know what to do."
2% of your portfolio. You're done, son.
I'm done, dude. If I lose 2% of my portfolio, my retirement is ruined.
Yeah.
This is something I pointed out in the Enron thing. I go, you all could have saved yourself a lot of trouble by just proper weighting in your portfolio. Some people would say no greater than 7%. I disagree with that. I don't go greater than 5% in one individual stock. But, you know, again, everybody's investment philosophy is a little bit different.
Yeah. I would say, yeah, no, because there have been times where I've been very concentrated, not that concentrated. I'm entering an era where I'm more concentrated, and in doing so, yeah, I that was the strategic shift that I was just talking about, referring to. But yeah, with Baba, I'm waiting on the sheep pump. So I bought some at when it got to that new low. And I doubled the position, right? Because I have a little, fun position in it. And because
Fabio, that's the mistake I made.
what happened?
That's what I realized when I went back and started looking at my process. I realized I got caught up in irrational exuberance myself.
Oh, what rational exuberance with Baba?
First, on my cash flow, I used a 20% growth rate over the course of 10 years. Never should have done that.
What did you use?
I admit now what I did with Baba, and I'll tell the audience. I made the numbers fit what I wanted to do subconsciously. I didn't do it on purpose. But when Baba started to really drop and stay down, I really started assessing my own individual process. The conclusion I came to was I ignored shit that I shouldn't have ignored because I got caught up in the irrational exuberance. I'll say it again, man. It happens, dude.
No, 100%. It does happen, and what my issues with Baba were.
Yeah, the VIE structure.
So anyone curious, I think this one's a good video to go watch, and it also explains why I own it at all, because I tell you in the end of the video. But December 2nd, 2021 is when it was posted. That's the title. It has a crazy thumbnail. So you look up Capital Mindset Baba, it should be very easy to find, or you can use like the content library to find it. But anyways, so I had some new, I had the position and I doubled the position, but it's still tiny within the portfolio. And I did so after the recent crash, and I started talking about Baba again, because I really do believe that the market doesn't care that much or truly understand the VIE. Because a VIE, I have a buddy working on a VIE right now, right? It's an umbrella term.
That's what, when we were talking about that, and you were telling me, and I will admit this, I should have listened to you. I didn't. I'm stubborn. My bad. Most people aren't going to understand the VIE structure and thus not care about it, is all I'm saying.
Yeah.
And the reason why I didn't really care about it is no matter where you go in the world, the bottom line is always money and resources. So as much as President Xi wants to be an authoritarian dick, he also wants money. And that's why I kind of ignored it. When I went back to the drawing board, what I realized was my mistake wasn't buying Baba. My mistake was buying Baba at the price I bought it at.
Yeah, you're seeing it from the perspective that you could have been pricing in greater risk. enough. But
I'm seeing it from the fact that I got caught up in irrational exuberance, and that's what you need to do. Every time you make a mistake on a stock, just assess what I did wrong. This is why I clown guys like Jeremy all the time, because they're not assessing what they're doing wrong.
Here's my thoughts even back then. You can go watch the old videos, everyone. But my commentary on it was, people asked, well, do you think they're worthless, like literally worth zero? And my answer was always no, but they are worth pretty darn close to it. Because
let's look at Smile Direct Club. You tell me, okay? Total liabilities are greater than total assets. Does that sound like something you want to buy?
Now I'm having to rely entirely on the operations, bringing in more cash flow to make up for it.
Yeah, and I mean, that's an extremely simple thing to look at for the investor. Like, I'm telling you right now, if total liabilities are greater than total assets, the company is a no-go for me. I'm not interested. I'm not interested unless I can get it. Well, I shouldn't say that. I'm interested if I can get a good cigar puff. You know the cigar puff thing, right?
Yeah. Hey,
yeah, I'm interested if I can get a good cigar puff. But if it's trading where I can't get a good cigar puff, I'm not interested.
Yeah. Well, there's a company that was a good cigar puff recently in hindsight. We'll talk about it real quick. But we've mentioned it in the past before. You're going to go away for a second as I pull this up. But as I type in the ticker, people are going to be like, oh, I remember that one. So Sleep Number, SNBR, right? So this is a company. Oh, I'm going to put you away for a second as well. So you see this, the 5-year chart. Every time I click on this, it puts away Discord for a second. But anyways, see the 5-day chart.
No worries. I'm just going to pull it up on Stock Analyzer. And you just tell me.
You're gonna catch it immediately, though. You're gonna. This is an avoid for you. But this was a cigar puff. So there's some details I'll go over with you. But they have a good portion. Well, I'll wait for you to catch it, because go to the current liabilities, look at the current assets, and then I'll give you some of the context that Stock Analyzer will not tell you.
Dude, the problem with Stock Analyzer, and I've found this out over time, a lot of their numbers are actually off.
Yes, because the aggregations are off. But it's free, so can we complain? You know.
No, that's the thing. But that also brings up a legitimate point in investing. When you said, hey, but it's free. What does that mean?
Yeah.
It means if it's free, you've maximized your return. You took on zero risk. All right, yeah, I'm pulling it up now.
So skip over to the balance sheet, go to the current assets, current liabilities. Let me know what you see. But point is, this was kind of like a last-ditched effort. They did a bunch of buybacks during 2020, 2021. They took on debt to do that.
Holy shit.
Yeah, you see it, right?
That's awful.
Okay, Paul bought this.
Total current assets of 197 million.
Paul bought this, Jay. You just defended Paul, but Paul bought this.
No, what I've defended Paul on is through accident.
Yeah.
He has on some occasions bought companies that I would agree with.
Yeah.
That's all I'm saying about him. Like, here's the thing about, the craziest thing was Intel stock drops and everybody went after Paul. But I'm like, okay, but I honestly still don't think Intel is the worst investment you could make out there.
Someone says Paul bought it at $70. What the heck?
I don't understand in any way. And yeah, we do need to shit on Paul for this. But this is what I would ask Paul. I didn't even pay attention to Sleep Number because I just didn't want to buy it anyways. But I don't in any way understand how. I don't in any way understand. Wait a second. Am I looking at the right thing? Total assets. Okay, I looked in the wrong spot. Total assets 940 million. Total liabilities 923 billion or million. Yeah, I'd still not be interested in it because its liabilities are almost the same as its assets.
Before you
Why
got on
would you
here,
buy it?
I'll show you another cigar butt, but the one I actually invested in. And it coincides with Luis Alberto's comment here, but his comment saying companies on the verge of bankruptcy or with liquidity issues can be very lucrative investments if you know what you're doing and allocating a very small part of your portfolio. We will look at a real life example that you guys actually, as part of this YouTube community, have seen me be a part of. And I'll go over it with Jay, because I think, Jay, you get excited just to look at any stock, right? Here's a stock we can look at. And
I like stocks because they're puzzles.
Yes, and this one's another one for you. So, well, Sleep Number has its thing. So one context that website's not giving you is a lot of that current liability comes from a revolving line of credit. It expires in 2026. So when I did videos on this, and it's funny because Paul eventually sold it, and he claimed in his video, he's like, I called my friend, and my friend told me they're still like a value stock, but they're going to go down further. And I forget what else he said. Oh, and the reason why he sold, he didn't want to say it's because of that reason. But what he said verbally in the video was, I sold them because they bought back shares at higher prices. That was his reason. I was like, bro.
Well, the problem with a huge problem Paul has, honestly, is that one of his pillars is, are they doing share buybacks? I cannot say this enough. Share buybacks are not always a good thing.
Yeah.
I don't know. It's another thing I don't understand. It's like, why do you think it's good to use the company's money to buy, say, a stock with a 50 price to earnings ratio? It's clearly not undervalued. Why would you waste your capital like that?
Yes. And well, anyways, kind of going over one of the other more, I guess, nitty gritty details is, well, the environment that we were entering. Yeah.
Real quick, can you put Facebook's balance sheet up for people?
All right, sure thing. Let me just bring it up here so we have kind of like a seamless. You want just the recent 10Q, I'm guessing, right?
Yeah, whatever it is, because I'm looking at stockanalysis.com if you want to use that one. But look at Facebook's cash and equivalents.
Monstrous, I know.
And then look at their total debt.
Monstrous, I know. It's ridiculous.
Their cash and equivalents are greater than all their debt.
I know. That's something.
So, like, this is what I'm telling people. Like, my problem with Meta was basically the valuation, in the fact that I don't know how much I actually believe in social media to begin with. But I mean, if this, again, I've crapped on Meta for a while, but if this company drops in the right price range for me, I'm buying it. And basically, for me, its price to book would need to be right around 1.5 or better, and then I would be in on this.
Well, it's funny because they're entering a phase of their life where they're going to be a lot more asset heavy. So yeah, that price to book would work, because people are saying in the comments, and I agree with them, you're probably going to be avoiding asset light businesses. Like, you're going to be avoiding companies like, just to name one off the top of my head, Alteryx or another software company. Any of these software companies, these software heavy companies, where they don't have a lot of CapEx in the first place. But
yeah, okay. So again, I repeat it. Why I use price to book now instead of doing cash flows is it gives me a better, more conservative number. And for my strategy, that's what works. So people have to understand, right? My 401k only contains index funds. The best probable return for me is to max my 401k. So then stocks become fun money, and I don't like losing money. So what I'm going to do is do analysis at that point. But it's like, here's what people have to factor in for me and why my strategy is the way it is. I have to put $22,000 this year to max my 401k. All right, I make good money, but I mean, once I max $22,000, I mean, I have very little money left over to buy individual stocks. So that's why I instituted the program I instituted for myself.
Yeah, well, you should just buy Bitcoin, and that will solve all your problems.
Yeah, but like, what? Well, this is what I was going to say, Fabio. You have a little bit different investing strategy than I have. At what Facebook is doing right now, I would be adding this to my portfolio.
Heck yeah.
That's what I'm saying to everybody. Just because I don't like a stock doesn't mean it's not right for your portfolio. You have to adjust your portfolio to what you need.
Well, I want to give you this other cigar butt. It wasn't a cigar butt, but another one of these. This one was priced for bankruptcy, and it was on the verge of bankruptcy. And that's when I bought it in a smaller portion of my portfolio. I just spoke with everyone before you got on here, but I want, because I think you'll like it. So it's this one. Okay, so I'm now, hindsight's 2020, but I'm up just over 140% on this stock. My cost basis is in the sixes, mid sixes, high sixes, around there. And yeah, just look at this company, ticker symbol ASPS.
Yes.
And one thing you want to see
is it Altisource Portfolio Solutions?
Correct. That is the one. And a lot of the gains, by the way, have been in the past 5 days. It's up 46% in just the past 5 days alone. So there's some added context that's going to be necessary. But what you start to notice, what do you see in the 2020 time period? Current assets, liabilities.
Where do you want me to look?
Look at the liabilities. Cash flows, I'll just spoil it for you so you don't have to go to the cash flow statement. It's negative. Go to the
Give me a second. All right, I got it pulled up on stockanalysis.com. All right, my PE ratio is 8.87.
I'll bring it up too on stock analysis so we can follow along with you. I don't really go on this website, so this is my first time. But
what I'm looking at right now is the revenue. Revenue went down, but I don't really, this is going to sound weird to people. I don't really use revenue. Why? Because we're going to talk about Enron, and that's where they hid a lot of the fraud.
Okay, so you're saying the revenue went down, right? You're seeing that?
Yeah. What I'm saying is, and I'm going to point this out in the Enron video, and I'm also going to tell you, I had my suspicions, and then I downloaded an academic paper on it, which confirmed my suspicions. But I just like to bring up that revenue, in my opinion, is something that is a secondary factor when you're actually looking at the revenue. The reason being is because revenue is easier to manipulate than, obviously, the free cash flows.
Because of recognition principles, you're saying?
Yeah, because, I mean, if I'm going to look at the bottom line, I want to know the cash flows. That's me, personally, but...
Okay.
Total... I'm looking, dude. I'm going through it. You can keep talking.
No, I was gonna...
I see what you're saying now. All right.
What do you see?
Well, total liabilities are greater than total assets. I mean, generally that'd be a no-go for me, but let's go down here. All right. You know what? I'm going to just use my ratios. Yeah, I'll be honest with you. You made money on this. I probably wouldn't have bought it. So tell me what you saw.
All right. So this company at the time of around 2020, they deal a lot in foreclosure services, foreclosure servicing. What happened in 2020? I have 2 videos on the channel on this stock, and both of them were in the very beginning when I was a smaller channel, and then I refused to do any more videos. And there's actually a subscriber out there who was, I think, a big fan of these videos, and he always would ask, he or she, I don't know what they are, but they would always ask, hey, when are you going to do another video about that? Or when are you going to talk about that? And I would tell them, well, I'm not going to talk about this stock anymore. Those are it. That's all that exists. And but anyways, point is, so the context is their business was basically illegal to do. And so that absolutely destroyed the business because they can't do business. We had a foreclosure moratorium. Remember that?
Oh, yeah. Okay. Yeah. All right. I see what you're saying.
So under that context, when I was buying them, it was just after a recent fall. And there was basically as much belief in it that it would die as a company more than ever. And they had a slew of assets that were difficult to value from a balance sheet perspective because you were looking at the book value of it. You weren't looking at, let's say, the market value of those assets. And they eventually did sell one, by the way. So they sold one of the assets, and that was a huge inflow of cash. You can see that cash kind of flow in 2021's figures. So they had negative cash burn, but they sold an asset for about $100 million, and that kind of basically saved them. And one thing you'll notice is you look at the revenues. I saw that you probably saw the revenue fluctuations be pretty crazy. So 2014, 2013, around that time frame, that's all coming in from the great financial crisis. It takes a while for these foreclosures to go through the pipeline. And then...
Bro, pause for a second.
I got you.
What you just said there is what I keep trying to tell people. Where you're talking about 2014, 2015, that was a lag and that was a delay from the great financial crisis. This is what I keep trying to tell people. You have not even caught up to the market's view of the interest rate hikes yet. You haven't caught up to the last interest rate hike. That's going to be probably 9 months, 6. This is what my opinion on it is. It's going to be 6 months to a year after the final rate hike where we see maximum pessimism.
Yep. No, and someone's bringing it up right now. They contract for Altosaurus. They have released near zero foreclosures even till now. Yeah, no, they even talked about it in the earnings report, which was very recent. They're not going to be seeing it until Q3 2023. So if they hadn't sold that asset, boom, gone. But because they did that, and I had a strong... not like a conviction, like it's not a conviction play, right? Because hindsight, if it was a conviction play like that, right? And let's say I knew the story would play out, of course I would put more money into it. But it was a decent size where I would still feel it had it gone well, and also I would not basically lose your shirt if it gone poorly. So it's good capital allocation, and so they're not going to really, let's say, benefit from any uptick in foreclosures until about Q3 2023, Q4 2023, Q1 2024. That's the timeline they gave. So they can survive until then, but that's no longer the question, and that's why you're seeing such massive outperformance from the stock.
Yeah.
Change in sentiment.
This is the thing that I keep trying to tell people. The cheaper you buy it, the better your return. Like right now, I have some numbers in my head about Google. Nobody thinks it's going to go there. I actually do once. This is a thing that we have to be excited about. We haven't seen maximum pessimism in a long time. And when it comes, it's just going to be, this is what's going to happen for your audience at home. When you know maximum pessimism is in the market, is when people who don't know anything about stocks pity you that you like to talk about the stock market. It's the Peter Lynch cocktail party story.
Yeah.
Hey, give me a second. I'm going to run to the bathroom. And then do you want to do Enron?
Yeah, we can do Enron.
All right.
That's the next topic. All right, so while he's gone, I'm going to put him away for a second. While he's gone, I'll talk to some things. So yeah, the Daily Journal is another one. The Daily Journal, my biggest or my largest issue with the Daily Journal is, in my opinion, the misallocation of capital towards Chinese VIEs. I wish Munger would stay away from that and focus more conservatively on where the capital of the business was going into. So, that's just me. I do like a lot of their exposure to Wells Fargo. By the way, Wells Fargo is my opinion, or I've stated this in the past, is in my opinion the best positioned bank of the big banks. Bank of America is also pretty conservative, but Wells Fargo is one of the best, if not the best, bank right now. And if we go into a downturn, that's the bank. That's one of the big banks I'd like to own, and I do own actually. What I'd say also is, well, I guess this is repeating myself from an older video, but Wells Fargo is also the only of the big banks, the big four, that can repurchase stock at the present moment in time, while the other guys have to kind of wait, shore up their capital. Anyways, Daily Journal, another cigar butt-esque. I don't know if we can really call it cigar butt because I don't think anyone's pricing it for bankruptcy. But I just have that one disagreement. And Jay, when you were gone, I was basically saying,
what was the name of the company you just said?
The Daily Journal. It's basically Charlie Munger's baby outside of Berkshire Hathaway. So there are other mini Berkshires that I do prefer over Daily Journal, and even Berkshire Hathaway, to be honest. But Daily Journal has, that issue. Aside from that, I give it a thumbs up, but I'll also be honest that I haven't really looked too much into it. I feel like what comes after Munger in that business, because if the next managers are going to be still following the same philosophies, but if they, let's say, change how they direct what stocks they're buying away from the ones I don't like, which being the VIEs, then I would actually really consider it. But I don't know. That's how I view it. So Daily Journal is probably going to look interesting on Stock Analyzer, but
yeah,
those are going to be a little bit more difficult to sort of value, because a lot of the value in the business comes from the portfolio, the premium of the portfolio managers, because it's a company that used to do something. Well, it still kind of does it, but used to make most of its money in other ways, and now it's in the phase, or a different phase in its life, and it's been investing its extra cash, its excess cash, into stocks or other businesses. Munger did just step down, by the way. Oh, he did step down. Okay, Munger just stepped down. They're focusing on digital news business now. They're having foreclosure. They have the foreclosure database for California, huh? So that's another one. You know what, Brett Green? I'm going to take a look at it, because my ASPS money is going to probably need to find a new home. For me,
hey, Fabio.
Yeah.
I want to send you a link, 2 links.
All right.
Can
send it
you
via
do
Discord.
that in Discord?
Yeah, of course.
Do
you throw it in the chat. You just plop it into the chat, enter, and I get it. Man, if Discord goes public, I'm going to buy shares just because. That'll be a fun investment. The classification, fun investment. We'll have fun with it. All right, so I got one link from you. All right, so let's copy the first link. All right, I hope it's a safe link, Jay. Don't do me like that.
No, this is complete porn. The most violent of it. Actually, this is porn. It's financial porn. Because we're all a bunch of weirdos that want to sit around and dig into financial statements.
All right, the second link didn't work, by the way, but just the first link worked. So I have the first link up. And
it didn't work?
No. It's a PDF, right?
Yeah.
No.
The reason why I did that is because that's the academic paper that I downloaded.
I'm going to put you here so you're not blocking.
Yeah, it doesn't. That one's probably not going to work either. Can you put that in your Not browser, but upstairs.
Upstairs.
Right here, where I'm clicking on the put it in the hyperlink place. Does it work then?
Oh, yeah. Let me try it. I tried that the first time. Yeah, I use this exact thing. So I plopped it in here, and it does this. Your file cannot be accessed. Did you download that PDF? If you download the PDF, you can just pop it in there, and it uploads the PDF to it.
Give me a second. Does that work?
Let me see. All right, I got something new from you. Oh, darn it. I'll put you here. Oh. Here. Wanted to open up on Microsoft. All right, here we go. So we have 2 pages. So you're going to guide us and let us know.
Okay.
Well, actually,
so I'm not looking at so if you pull up the actual 10K financial highlights 2000, and do you see that?
here, I'm going to do something different because I'm not the star of the show right now. So I'm going to put this up here, and then forgive my setup, everyone.
I don't know where the exact point is in there because listen, when I tell you guys this, where the fraud was, there was more fraud than this. And you would actually probably need a forensic accountant to go back and figure it out.
Okay. Here we go. So where do you want me to go?
Financial highlights.
Financial highlights. Here we are.
Okay. Are you looking at the revenue?
Yep, revenue's right here.
1999?
1999.
2000?
Okay, if this keeps doing this, I'm going to have to not do it this way.
What happened?
Yeah, I'm going to have to not do it this way. I wanted to have you be like the star of the show.
Yeah, man, you do it. Just throw it out, dude. Whatever. We're having fun. Doesn't have to be serious.
No. Okay. I got it this way. I'll just do it this way. All right, you walk us through, and then so revenues.
1999. This is so. Let me go back for a second. I had no idea where the fraud was until I downloaded the Enron paper on it, right? Mm-hmm. But here's what happened in my head. I looked at the 1999 revenue, right? And that's $40 billion.
Okay.
How did it jump with a company the size of Enron to $100 billion? Yeah.
Well, that would be a question that maybe we could find out from news at the time. I'm trying to not, use hindsight in the answer.
Yeah, no, I agree with you on that. But I'm just saying that immediately when you're looking at it, that should send a message to you. When you look at like a company that size, as big as Enron was at the time, and like a revenue jump like that when a company is large like that, should be a red flag. What went on in there? Well, I mean, I guess we're not going to get too far into it because I don't remember exactly where it was, but what was happening there between 1999 and 2000 is that Enron got desperate and they were hiding loans inside their revenue.
Yeah, here, I'm trying to find out, what do they have in their AR account? Here we go. No, it's revenues. Okay, so We have 1999, natural gas and other products rose and more than doubled here. It's ridiculous.
Fabio,
Electricity,
this is what I'm saying to you too.
metals.
You need to pay attention to how difficult this financial statement is to read. Enron's financial statements, when I was looking at 10Ks, were ridiculous versus a lot of companies where it's simple and it's easy. But, you know, so what I did basically is we have to go look at this. So if you're looking at the financial highlights, here's something that should have been a red flag to you if you were looking at it. Its earnings per share, right? Its diluted earnings per share are 1.12. At the time in 2000, in between these numbers, Enron was trading around somewhere around $90. So already, if you do the proper math, 20 or 22.5 times 1.12 would tell you that you're overpaying by about a factor of 4 to 5.
Something also weird here.
Bro, there's so much weird stuff in there that I didn't even catch. What I caught was the revenue, and I was like, that does not make sense to me.
Okay, so usually when revenue is off, right?
Mm-hmm.
Revenue went up more than double.
2.5 times.
Yeah. So another line item that's kind of coincides with revenue is AR, accounts receivable, because that's money that's recognized and owed to them. And then
So what are you seeing in AR?
Trade receivables, net of allowance for doubtful accounts, 133 and 40 respectively. So AR also rose by about a factor of 3. And allowance is only 133. That's, let me use my phone calculator. What kind of percentage is that?
Fabio, you see how Enron, look, I'm not going to compare to you or Chris on the accounting aspect of that, and I fully acknowledge it. But you see how a finance dude, right, went through there and was going, these numbers don't make sense to me.
Yeah, that's only 1.27%. It's like they're absolute chads at collecting.
Yeah, bro. The thing is, man, is like I said, basic financial knowledge would have saved a lot of these people because, again, it goes back to if you had weighted this properly in your portfolio, you wouldn't really have slowed down your retirement.
They must have made a claim or something to account for that revenue growth because, okay, goodwill is not changing. There's no acquisitions that I can see. There's no like major acquisitions.
Yeah, they were. So, I mean, if me, you, Chris, Cole, we all sat down on this stock and we looked at it, we would have come to the conclusion that there's something weird going on here that I don't like.
Yeah, and I'm trying to work around trying to see not using hindsight. So
bro, and here's another thing. Obviously, this goes with, but if you're looking at the financial highlights, this just reoccurred to me. Look at the jump in total assets.
Oh,
33 billion to 65 billion.
Total assets. Oh,
how?
Yeah.
How did you jump like that? Especially when you go back and you look at how the numbers were going before. Something is not right there.
It's not cash. Looking here is trade receivables. Trade receivables right here. Net allowance for doubtful accounts, 133 and 40 respectively. So that was a huge jump. But I don't even think in 1999 they were good because that rate is so small. And then assets from price risk management activities. That's That's a fake account.
That's what I'm saying, dude. When you look through their 10K, it doesn't make sense. It's overly complicated to confuse you.
Yeah, deposits here that I would need to see, like, what is that? 81 to 2.4 billion. That's too much of a change. For me, I would not question it. Just as I would with another stock if I see something crazy changing. And then going through some other things. Okay, goodwill's not changing in anything that would catch my attention. Only the fact that it doesn't seem like they're acquiring anything, yet the growth is just seemingly entirely organic. So I'm talking about sales growth, by the way. Sales growth is seemingly entirely organic, which under the context of the time, where it was energy just blowing up in price?
No. I mean, energy is pretty much, it runs in cycles.
So look, I would trust here, the property, plant, equipment is actually being measured probably correct. Nothing there catches my attention to go that there's something strange going on there. Investments and other assets here, yeah, like goodwills, that's not crazy. Nothing here catches my attention. Most of the stuff that's catching my attention is the current assets, funnily enough. Not funnily enough,
yeah.
Which is...
Because obviously, if they're hiding in the revenue, it's going to affect there.
Mm-hmm. Yeah, if it was hidden in the revenue, now let's go back to hindsight, we would catch it in receivables. We would catch something in receivables. We would catch something off guard. Current liabilities, accounts payable. Okay, so they were saying their long-term debt, that's fine. That's probably not going to be off. Total liabilities, stockholders' equity. So what was their total shareholders' equity? 11. They were probably negative equity the whole time.
Yep.
Where's total assets?
If you go to the academic paper, they do break it down for you really easy. But what I'm saying is, the reason I wanted to do this is, could like a normal dude.
Wait, what are you looking at here?
Which one?
Look at this. All right. Wait. This is something. Revenues. Okay, so. No, I was trying to see if I caught something there. No. Net income 979. Well, I mean, my God. Okay, margins are absolutely garbage. Total cost and expense, cost of natural gas, extreme product. What the hell is this?
Bro, here's a sign too. Cost of sales. From 99 to 2000, it went up by, again, almost the same factor as the revenue went up.
Yeah,
I mean, dude, look, none of us are forensic accountants. So for us to actually just find it is probably not going to happen. My main point by just looking at Enron and studying it was, what can a normal person learn from this?
No, I'm serious that there's something in the cash flows. Hold on, let me go back.
There probably is, man. I mean, you're talking about they had pipe-hitting accountants in there trying to figure out how to make it so you couldn't find the fraud. I mean, these are highly educated, intelligent people doing this.
Check this out. So, okay, my brain's like falling apart now. I don't have to.
Yeah, what page are you on?
I'll go to, because that's where I was at before, and then I ran back up to the income statement. Now I'm back at the statement of cash flows. Page 34.
Okay.
So the cash flow from operating activities is drastically, almost consistently larger. Because if either more money is being, like, it's ridiculous. It's ridiculous. It's not like a small amount. It's ridiculous.
Okay, so your cash and equivalents in 1999 goes from 288 million to $1.374 billion in a large, slow-growing company? Something had to happen there. You had to sell something or something happened in there.
Going line item by line item. Depreciation, amortization, impairment of long-lived, deferred income taxes. Okay, that's one. I'm looking at the big ones first, actually. That's where I should be. Changes in components of working capital. Boom. Why? Okay. And then proceeds from sales. Yeah.
Maybe you can explain it to me. What are assets from price risk management activities, and why did they grow by a factor of, again, 2.5, almost the exact same factor that the revenue grew at?
That almost seems to me like it could be a derivative asset that they're using to protect. That's in their assets, right?
Yeah.
Yeah.
I don't know this line entry.
That's probably a derivative
Assets from
asset.
price risk management activities.
Yeah.
I don't know what that means.
It's probably like futures contracts, stuff like that. To protect like the current price, or secure a future price. But yeah.
Oh, and here's another thing. When we get down to plant, property, and equipment at cost, none of that is jumping to a level that would justify what happened with the other stuff. That makes any sense. I don't know if that makes any sense.
There's a lot of questions that automatically would arise, and it'd be very suspect.
Yeah. I mean, when you're looking at, okay, so I don't know what assets from price risk management activities. I don't know what that is, and I don't know what you mean by that, but I can look at it and tell you your numbers aren't growing at the rate they should grow. And your total assets almost doubled in a year. Okay, maybe if you're a small company,
I know
it's growing rapidly, but not a company the size that Enron was.
Here, where's the I'd actually have to see where's the subsidiaries. Let me see if they have subsidiaries in here.
Bro, here you go, right here. There it is.
Where?
Accounts payable. Why'd you jump so much?
Yeah, I'll come back to accounts payable. So accounts payable, where's the balance sheet?
Yeah, dude, why did that grow so much? Something happened in there.
Well, I think
you took on loans that you got to pay back.
It's down here. Long-term accounts payable. Okay, so how much did it grow? Yeah, from 2.1 to 9777. Absolutely ridiculous.
And Fabio, under that, liabilities from price risk management activities grew from 1.836 billion to 10.49 billion.
So there's a matching going on there because they have it in, yes, but then.
Oh, do you see how all the numbers, when you look at them, don't make sense?
They do not.
Again, here we go with total current liabilities right here. 1999, 6.759 billion to 28 billion in 2000. Where did you get those liabilities?
That could be
because your long-term debt barely went up. You have something in there that like, this is what I'm saying about Enron. The signs were there, whether you're like, look, most of us aren't forensic accountants. We're not going to find this, but the signs were there. If you were looking through everything, where you start having questions like, this doesn't make sense.
And let me see this. Enron Corp So they have subsidiaries, probably, because I see that word.
Yeah, there was other fraud on top of this. The paper explains that. You can read it if you want to.
Well, I did in an academic setting in the past already. It's when you do in your auditing classes. But it had to do a lot. There was a lot of stuff with their subsidiaries. They created a lot of entities that would have put VIEs, made VIEs blush.
No, yeah, bro, I agree with you on that. Yeah. Again, so in 1999, total assets and shareholder equity, or total
I'm looking
assets,
now at the
total
chat, so
liabilities and shareholder equity grows from 33 billion to 65 billion. So, I mean, on that alone, I have some questions. What grew? Did your shareholders' equity grow, or did your total liabilities grow?
The world may never. No, I'm kidding. I was gonna do it.
The world will never know the answer.
Yeah, let me click on you to have you there. Well, there's companies that we could talk about now that are also overt frauds, just haven't gotten caught yet.
MicroStrategies by adding Bitcoin to their balance sheet.
I would call that more like a mistake that could be, considered to be, how do you say, fraud in the sense that you didn't do well by your shareholders. So negligence.
Bro, if you were a CEO of a company and you spent company cash on Bitcoin, I would sue you for financial mismanagement.
Is he I haven't been paying attention. Has he been kicked out of the company?
Not that I know of. Michael Saylor is a fucking clown of epic proportions.
Yeah. There's like a, yeah, I mean, he really just pulled a Hail Mary, and it was a failure of a Hail Mary. Well, for now, I don't know. I don't want to say that.
He's been trying to pull Hail Marys with MicroStrategies since the tech boom.
Yeah, this is his latest one. I think if this one doesn't pan out, I don't think he's going to recover. Or you know what? No. What am I saying? People are going to forget, and they're going to do. Oh wait, I'm looking at chat now. Hold on. We have Julius Caesar saying. Wait, let me bring up your comment because let's. This is.
Yeah, I'm interested. If anybody has any comments about the Enron stuff, I'm still trying to find it.
Look at the end of the cash flow statement. Breakdown on change in working capital. Notice how their current liabilities drive working capital. All right, let's go to the cash flow statement.
I'm on the statement of cash flows right now.
All right, so
what did he say to do?
Look at the end of the cash flow statement. Breakdown on change in working capital. So there's a breakdown on change in working capital. I'm getting back up there slowly.
Changes in components of working capital. Receivables decreased by a ridiculous amount. Inventories increased. Payables went from negative. Okay.
All right, here we are. Yeah. I'm back now. I've made it. All right, so again, he says, yeah, look at the end of the cash flow statement. So,
yeah, we're going from 99.
Where am I at? Assets, liabilities, right? Should be here. Yeah, right here. Changes in components of working capital. It's at the very bottom.
Yeah, I know. I'm looking at it right now. You're going from the total is negative and was negative the year before to extremely positive, which, again, I've got questions. But your receivables went negative by a massive factor.
No, look what they did. So it looks like receivables and payables. That's the story here. So receivables, they're removing that, right? Look at the payables. Mm-hmm. Yeah, that's the current liability that he's referring to.
Mm-hmm.
So, yeah.
Look how much that jumped.
Yeah. That's ridiculous. But anyways, the rule of thumb here is you don't have to necessarily see this and go, that's a fraud. You can just say, that's too complicated.
That was my point in my video. I go, they're overcomplicating your financial statements. I'm not interested in that. Like, I'm not going to hunt through stuff. You know what I mean? Because like I said, it really took forensic accountants to actually break down what happened. But there were signs if you were paying attention to them.
And the beauty of it at the end of the day, which, oh, by the way, after I get my CPA, I'm actually getting my CFE.
I love it.
Yeah. So.
But this is what I'm going to say to you. By doing this, and just look, you don't have to be a CFA, you don't have to be a CPA, but by looking at the financial statements over time, you're going to learn to look for just outliers that you just go, yeah, I don't know what you did there. I'm not interested. Let me go buy a different company.
Well, I'd almost like to, you know what, should we do the other company?
What's the other company?
The one that is questionable.
If you want to bring up the financial statements, yeah, man. I mean, we're having fun. Like I said,
I'm having fun. I think we lost all the people who don't like accounting.
Bro, I had a lot of fun going through. Like, it's ridiculous to admit this on YouTube. I had way too much fun going through Enron's financial statements to try and find fraud I didn't know how to find.
All right, here we go.
Bro, I was coming home from work, and I was at work, and I would just be sitting there on my break time, just looking at the financial statements, and then I'd come home at night, and I'd be like, yo, I'm going back in balls deep into Enron.
Here we go. So I'm gonna try to obscure the name of the company as much as possible.
Well, text it to me so I know what to look for.
Okay. So I've texted this to you last time. Well, I'm questioning whether or not we just go. I think it should be whatever. It's fine.
Yeah.
It's fine. It's Mr. Fat. You know the name of the company.
Oh yeah.
There it is. There's the name of the company. I'll move it up. So, yeah, anyways, so we'll go over some of this. So we see it at the beginning. I'm looking through it. I actually also want to bring out the 10K.
Yeah, man. I'm always interested in the 10K.
All right, so we're going to go 10K as well as quantitative.
God damn it. Just re-text me what that company is.
Oh, I said the name. It was Fat Brands.
Oh, Fat Brands.
No, I wasn't leaving you there guessing. Must have broke off. Discord must have broke off.
What's the ticker, dude?
FAT.
Okay, I got it.
So we're not saying anything about it, but we're saying that some people might look at this and find things they might have question marks about certain things. So anyways, so this is the annual statement, and well, we'll put Enron away for now, and then where did I shove the quarterly? So let's put it all next to each other.
Do you want me to do the 10Q or the 10K?
We can do both. I right now have the 10Q pulled up to have the most up-to-date financials. So right now we have 39 weeks ended and 13 weeks ended. We're going to go with the 13 weeks ended for now. We see the revenue breakdown: royalties, restaurant sales, advertising fees, factory revenues, franchise fees, management fees, and other income. So one point is that the royalties might be used as collateral at some point for some of the debt. So keep that in mind. Put a pin in that. Let's go down. Cost of expenses: 28 million SG&A. Cost of restaurant factory revenues, another 55. Depreciation, amortization. All this looks normal. Cost and total expenses 102. Operating income about that's about, I think, 1 million. By the way, that's 100 million in sales, 1 million in operating profits there. And then other expenses, we have interest expense, 20 million. Boom. Interest expense related to preferred shares, 5 million. Boom. Right there, things should start to come up as questions. But this is now. Let's look back then, because this is actually, like, you already know the story. Doing all this and putting it into a little email and giving it to Strongman was actually how Strongman even found out about Capital Mindset. So, but anyways.
And no, when Chris brought you up to me, and then I watched a few videos, and I was like, all right, yeah, man, I'm in.
Did he tell you that this was the thing we sent him?
No, we didn't really we've never really gotten into that, but yeah, like, no, I mean, my thing is this. I don't really care what anybody really knows as long as you have a reasonable investing process. You know what I mean? Like, this is what I would say. If you're just an index fund investor, primarily an index fund investor, so I just consider you one of the crew. It's clowns I don't like who push share diluting trash on people.
Yeah. Well, this is one of them.
Yeah, no, dude, I'm in agreement with you. Like, honestly, you know, when we were doing the rabble on Saturdays, if somebody could have just said, I don't know anything about investing, I just buy index funds, I would have said, you're in the club.
Yeah. I think that's a growing club now. It's growing.
I mean, even if you're an individual stock investor, if that's your philosophy, like, let's bring up Paul again. Personally, I still think even if that's your strategy, at least 30 to 50% of your money should be in a low-cost index fund.
Yeah. Well, even especially, I don't think he has the I don't know, like, recency bias to even justify attempting it. If anything, if his track record is to speak of anything, it should say that he should probably not make the decision.
Yeah, I'm not disagreeing with you. Like, I would say, you know, Paul, and this is a thing I'll keep going back to. A lot of people want to crack on Paul for some of his investment recommendations that fall immediately after he recommended them. What I'll tell people is you're looking at price, not value, when you do that.
Well, I would also argue that the value is very much incorrect, because one thing that's, well, I won't get into it because, again, I don't want to correct him. I let him keep doing what he's doing.
Bro, yeah, I love the fact that you get mad at Chris and I for teaching people stuff.
Because there's certain people I think you shouldn't be teaching.
Like Jeremy?
Yes.
Yeah, no, I agree with you.
That's exactly the person. That's one of the people that would say, yes, definitely.
Bro, did you see his video Chris had to do where he goes, $3 billion just vanished from X company overnight? And I'm like, bro, if you look hard enough in the financial statements, you'll find where the money went.
Which company was it? I can probably guess.
Ah, fuck. What company was it? I don't know. Chris did a video on it. Let me see if I can find it.
Lucid. Yeah, thank you, Julius.
That's what it was. It was Lucid. Well, bro, in the video, he talks about how Lucid is diluting the shareholder. And I go, how are you not putting these two things together with Tattooed Chef?
Stop it. Stop teaching him. Just let him do his thing. Just leave him in his ecosystem, his playpen, and just give him those little toys and let him put his shapes into the toy, and just watch him. Don't tell him where to put the triangle. Let him put the triangle in the circle.
Fabio, my brother, How mad are you going to get at me tomorrow when I do a video clowning Sven Carlin for his opinions on Amazon?
Oh, I won't get mad at that. No. He's one of the ones that would be too prideful. But Sven as a creator, I think just went off the deep end at some point. He just went off the deep end. There's at one point where he just kind of bloop, or maybe you could make the argument that he was always like that, but I think he just like went off the deep end at one point.
I think he did a little too. Because
Okay.
when I first started watching him, he had very reasonable projections. But then there became a point where I was just looking at him going, how does a PhD of finance tell me that?
Okay, maybe I should redact that, because I'll just say this in case anyone has some sort of other understanding that he's done something else. I don't know enough to fully have an opinion to a positive or a negative opinion on him. So I'll just say it like that, because I had that problem in the past and I jumped the gun on that, which I'll actually, how do I put it nicely?
Oh, we all make mistakes.
No, the Chris Norland guy. So he...
Yeah, he's a clown.
No, but I didn't know. I had no idea. So like that's why I'm now more like a little bit more careful as to which person, because my gosh, there's the things with AMC, Redbox. Was it Redbox? Yeah, Redbox.
Redfin or Redbox or Redfin, something like that.
It was Redbox. It was the DVD company when it just started mooning. And then he kind of just switches his content, deletes the old videos, and then Chris still has that community post where he has his video, but it's deleted. But as long as Chris's community post is up there, it's evidence that it was there. And then there's other people on Reddit who have kind of talked. But anyways, point being, what I learned my lesson from there is now I have to say, okay, if I accidentally, I go like, oh, that creator's good. I'm careful now, because now I'm like, well, I don't know. Do I really know? No, I don't. So I put that asterisk next to that statement.
I'm with you on that, because I've been disappointed with a lot of people.
Well, Paul, Everything Money would have, that one was a little bit like, because man, oh my God.
Well, here's the thing. Paul said things over, the time where I was watching his videos where I just started becoming more and more suspicious. Palantir was a big one recently.
Oh, that was only recent. No, man, there was some stuff. So,
back in the day, he said shit like like recommending Sleep Number. At the time, I go, bruh, it's a bed company. If you give me the choice between a bed company, knowing nothing, and VT, VTI, or VOO, I'm going to take those all day.
Yeah, but they're buying back stock and they're passing all the 8 pillars. That's what you don't understand, Jay. You don't understand. It's the future. Bed is the future. But I agree with you. But then there was plenty of them. There was like, you look at the one of the new intros that Chris has. It's hilarious. It has all of the, like, him talking about his portfolio, and then all the stocks that just come up, and they're all next to the index. Both indexes, by the way, VT and VU. Did you see that?
Yeah. No, I haven't seen it.
Oh,
but that's
you have
hilarious.
to see it. You have to see it. So I have it, so I can play it, but oh boy. We're doing it. So
we're doing it. Chris isn't gonna get mad at you, dude. Just play it. It's funny.
So here, what I'll do is I'll play it through YouTube. All right, so I got to pick it up. Strongman Personal Finance. All right, and then let me go to his live streams. This man, and he's gonna use it. And so it's. Okay, so no, it's not that one. All right, make sure your volume's on to see it.
My volume's up, man.
All right, everyone, I apologize at the end of the video because there is something for you. So I'm excited when we get to actually see it. on the big screen? Okay, so all right, everyone, here you go. I'm gonna unobstruct this. All right, so I'm gonna play it. Ready, set, go.
I'm Paul. I'm a value investor. Return on equity is assets minus liabilities. A lot of
Oops.
this conservative get. The stock is currently at 182. The low price is still higher than the current price. I'm a buyer.
Oops.
I'm Paul. I'm a value investor. But the real true investor is the one that does well during a bad time. I have Baba, Carnival Cruise Line, Farmers Bank, HPQ, Intel, Facebook, Miller Knoll, Sleep Number, Smith & Wesson, Steelcase, GDX, GDXJ, and Walgreens.
Oops.
I don't pay attention.
You never know who's naked, and I rarely say too hard.
I think my dad finally feels I'm not a failure.
I think so.
Because of everything money, you think?
Yeah, probably because of everything. No, everything money, he thinks I'm not a failure.
Yeah, that's gonna be one of the intros now.
Yeah, I mean, look, here's the thing. I mean, everybody has their... Here's the thing, dude. I'll say about Paul. I don't agree with a lot of the things that he does, but at least he has a process versus a lot of these other YouTubers.
Well,
You know?
okay, I can tell you.
I'm just trying to be fair to him.
Yeah.
I don't agree with a lot of the things that he says.
But I think Jeremy has a process too. They all have a process.
Yeah, that's true.
You know what I
You
mean?
bring up a point there that I can't really fight against when you say that, dude.
Jeremy has a process, and he goes. What metrics? You know what metrics he looks at. That's his process.
Revenue my avenue.
He has a couple pillars, right? It's just just a different set of pillars.
Yeah, no. I guess you soundly defeated my argument with that rebuttal. That was a riposte. I tried to hit you with my rapier and I got cut in the process.
Yeah. No.
Yeah, dude. I mean, I don't know, dude. This whole thing has gotten to the point where I just go, listen, people at home, develop your own investing process. A lot of the people that you're seeing on TV, they're clueless. Figure out how you want to go about it. If you don't want to learn anything, crush your index funds. You'll probably outperform the vast majority of people anyways.
I'll name a couple that are just pretty good, solid ones. You got VTI, VU,
VTI. Yep.
SCHD.
Oh, there's a great one that Fidelity has, and it doesn't even charge an expense ratio.
No expense ratio. Look at that.
Or it's so low, it's negligible. Even lower than like VT.
Well, VT's is actually a high one, right? You know that, right?
Yeah, because of the fact that you have to factor in international stocks. But I just, before I met Chris, I was VTI. That's the vast majority of what I bought. And then Chris, basically, he convinced me. He was like, well, what happens when U.S. stocks get outperformed? And I was like, I sat there and I thought about it and I just went, you know what? He's right about this. You know what I mean? It's just like, even if I have to get a little bit lower return, just having the entire world market as my core, I looked at it and I was like, I really don't think you can do worse than that.
It's like VT will always underperform. That's correct.
Yeah, because some years international outperforms, some years US outperforms. But go ahead. Sorry.
No, I'm saying like it will. Oh, someone's actually telling me to say GK, which is what's that ETF? It's supposed to make you laugh. It's this one at Gerber. Ross Gerber's ETF.
Let me type that in.
it's not been a good performer. GK. Who would have thought, though? I did a video actually giving my... when I did the portfolio videos or reviews, I would tell you at the end of the videos, by the way, just to the audience, if I thought the creator would outperform or underperform the market. And I reviewed Joseph Carlson, said he would underperform. Everything Money said they would underperform.
My conclusion on Carlson was, I don't understand what he thinks his portfolio is accomplishing that an ETF couldn't.
Well, he created like the story fund, right? When that one's it was only doing good during the clown times, and then things kind of reverted. But Ross Gerber is the same thing. Ross Gerber is a pro who says that, who was saying, when I did the video of him versus Peter Schiff, he was saying that housing stocks were very cheap. He should have known better.
Yeah, I mean, here's the problem, dude. When you look at the world market, what you're looking at is the entire world is computing fair value, and it's, everybody in the world is making their choices. Why somebody who's kind of central planningist thinks they're going to outperform that, I have no idea.
Well, I would probably say that outperforming VT won't be the most difficult thing.
No, I would agree with that too.
But outperforming VU and international every single year, both of them,
you're not going to do it.
Yeah, no, that's more difficult. So the US or international, basically, okay. No, this is the better way to say it. Outperforming every single index, national index. Let's just kind of say it like that, or market index. Probably not a possibility.
Bro,
or probably very, 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 very.
Do
very
this. Do this. How many investors do you know that if we went back to 1980, and between 1980 and 2022, consistently outperformed the S&P 500? How many people in the world do you think did that?
Very few, on top of the fact that when you consider, well, I'll say this, a small business owner or a business owner, they do it. That happens more frequently than you think, but it's different with internal rates.
I agree with you. A small business owner who owns his own business is going to outperform the market if he has a good business model.
The comment section is not going to like me if I don't mention this, but yeah, that's something we talked about in the past and it's comments coming from Joe Schmo with American companies, because I would say back in the day that American companies are no longer American companies. They're global companies.
I agree.
That's usually I think that's the most solid argument for VU supremacy in the present era of the world. Like when you're buying Procter & Gamble.
If you buy VLO and that's your investing philosophy, you're not going to get any argument out of me.
No, I know. Like, yeah, Jay's not going to be like, you idiot.
No, I'm going to look at you and go, I like VT. If you like VLO, I hope you beat me in the end.
Yeah. I always defend VT from like, because I'm more of like I feel like I understand why people buy VT. And then people who are VU supremacists, sometimes they don't understand why people buy VT or they choose to buy VT. Like I say, I don't try to put words in your guys' mouths, but like it's because you know it will underperform something every year.
Mm-hmm.
You'll know either underperform VU or international. But your point is you're focusing more on capital preservation and
yes, that's
bringing
the
more
point.
in and saving more. Yeah.
That's the point on why I actually, like I said, I was VTI before I met Chris. And then Chris and I were doing our live streams. And, I can be really stubborn, but if you make a good argument, you're really not going to hear much protest from me. And Chris and I, when we were talking, it's what I realized is like VT why I like VT is it's just a little bit more balanced. Because, like you said, some years US stocks are going to outperform. Yes, there's no argument for me on VOO. It's just I like the stability more of VT. That's what I like about it. It's underperforming either international or US stocks, but I like that because it gets a little bit less irrationally exuberant.
Yeah, no, so I didn't misrepresent the thought process. And I also want to just shout out again, because, there are people in the community who really like this index. And I really, I feel like it does a really good job at filtering out the garbage, which is SCHD. It's actually been a really good performer, by the way, since inception.
Are you talking about the Charles Schwab high dividend payer?
I don't know if it's the high dividend or the dividend growth ETF, but it's a
Which
favorite.
one did you say?
SCHD.
Yeah, I mean,
in a retirement account, that has done people also don't understand, by the way, the amount of money you have to make for qualified dividends for you to have to worry about them as a retail investor.
Yeah, dude, I brought that up, but then I really stopped bringing it up because I was like, listen, you're going to have to be making so much money that you really don't care at that point anyways.
Yeah, exactly. That's what
that's the Schwab US dividend. There's a great I think this is, look, here's what I'd say. You have to pick a strategy. And if your strategy is intelligent, you're not going to get an argument from me again. Like if you wanted to use the Charles Schwab US Dividend Equity ETF, SCHD, is your core holding, you're really, again, not going to get much of an argument from me.
Yeah, so like the total return, for example, in the past 10 years, total return, so including dividends, etc. S&P 500 has been 234.37%. SCHD has been 263.07%. And then we can max it out for the existence of the fund. It's not really that's not really comparable because I just put max and then it's like, well, S&P 500 has existed for longer because I think this one came out. So in reality, we have to kind of wait a little bit longer for really time to tell. But it has, when I look through it, it does have some quality companies in there. It really does. There are some companies I wouldn't like, but then we're getting in picky and we're not basic.
Bro, this is the thing, man. This is the thing. Once you pick your strategy, just go. You know what I mean? Like, okay, so we're looking at the Schwab US Dividend Equity ETF, SCHD. What I'm going to say to you is, I think you're not going to outperform VT by such a margin that it's stupid, but maybe you will. And you know what, again, I go back to, as long as an ETF is your core holding, and then whatever you do outside of that, you're really not going to get much of an argument from me because I don't know. I don't know what the Schwab US Dividend Equity ETF is going to do going forward. It could blow away VT or VTI. I don't know.
Yeah, that's true.
I mean, that's the hard part of it. Is I think a lot of people spend way too much time obsessing over 1%. Like a 1% difference. It's like, oh, well, it's been 40 years and I got a 1% difference between the Schwab ETF and you recommended VT, but I beat you by 1%. It's like, okay, bro, I couldn't have known that at the time. There's no way you could know that.
I actually, I don't know if we've ever went over, you and I, how I've done personally, but.
Well, I'm sure you've done well. I mean, you have a strategy. And, I mean, that's what it really is. Like, I mean, personally, look, if I average a 9% return over the next, 40 years and you average an 11% return, I'm just going to go, all right, whatever. It is what it is.
Yeah. Oh, it is. That's true.
All right, brother. I'm a little bit buzzed, so.
No worries, man. I'll continue it for a little bit more, guys, and then say bye to Jay. Jay's gonna hit the hay, and then thank you for coming on, Jay. Well, we should do this again.
Absolutely, bro. I just, like, sometimes I go to stand up on Wednesday nights. I just didn't want to have to do anything on, say, the exact day all the time. You know what I mean?
Mm-hmm. Correct.
But no, dude, this was fun.
Yeah, it is fun. I enjoyed the Enron. I enjoyed looking at the other. Well, we didn't finish the Fat Brands one, but we'll do that another day. We'll actually save for next time. So
All right, brother.
We'll explain that. All right, man. You have a good one.
I'm going to take off. Love you, brother. Have a good time.
Thank you.
Finish up the live stream. I'm going to go to bed.
All right. Good night. Have a good one.
All right, brother. See you.
Bye. All right, ladies and gentlemen. Okay, so it's now just back to me for now. We'll see. We'll see if anyone actually impromptu joins, but well, it's not over a StreamYard, so it's not like they can, but it is what it is. All right, so let's pull this up. All right, so just making sure. All right, you guys are all saying bye to Dan. All right, so basically just finishing off. You guys can ask me any questions you guys want, and I'll be happy to answer them. I see some questions. Oh, no, those aren't really questions up there. But there's one coming in. Fabio's 8-pillar strategy has worked out. I guess so. All right, so let's move this over here and put this over here. Just joining the stream. Can you start over? Thanks. Sure, we can start over the stream. Just ha ha ha. Yeah, I think it was a fun stream. We talked about a lot. Towards the beginning, we talked about, well, I got to share a little bit about my thoughts on the company that I might be just getting rid of. The ETF above is the best ETF ever to exist in the history of ETFs. And if you doubt me, then you're just wrong. So Ross Gerber is the greatest investor of all time. The next Warren Buffett, some might say. I've heard a lot of people call him that. So let's see. What is this other comment I'm getting? It was from even before Binance. Welcome to your first bear cycle, ladies and gents. Huh. Yeah. Anyways, when you increase liabilities, you laugh. Oh, okay. Redacted it. I was like, take your shirt off and get me another juicy screenshot opportunity. Oh, yeah. Do you think Musk is done selling? I have no idea if he's done selling right now, but, you know, his stock is at a huge elevated price, or it has been, so I am surprised he hasn't sold more when he did. I think he needs it to be a certain price for him to get a huge payout. I forget what it is or what the criteria is, and I think there's a current lawsuit in the works for that. I was trying to jab at Paul with the accounting joke. Oh. All right, so let's see here. Well, Sam's comments aren't coming up. I think, Sam, you're like retconned by YouTube or something. That is strange. Just, yeah, if only Paul depreciated land. That would be the epitome of it all. That would be the epitome of it all. So I'll probably talk just briefly about some things that have been changing. So we went over PERI's do you guys, okay, I have it filmed. Do you guys want me to post it? It's up to you guys. I filmed a session that we had within the community, and it was a live session where we had a bunch of people attending the earnings call for PERI on networks. And so if you guys want that posted, I will post it. Everyone who attended the meeting knew it was recorded, so they're fine with it. And then at the end of the call, there is some dialogue back and forth about the thoughts of what happened with the earnings report, what we liked about it, if anyone didn't like anything about it. If you guys want that to be posted on YouTube, I'll post it on YouTube. But for now, it's not posted on YouTube. All right, so I'll wait for that kind of response, and then you guys let me know. Should coastal land be depreciated if physically goes underwater, it would be written off, not depreciated. It would be written off. But good question. Yeah, so aside from that, though, a lot of the positions in the portfolio, like the bigger ones, they've done pretty solid this year. And yeah, and if anyone wasn't there, I can do it again. I can pull up the new one because right now for year to date, the portfolio is actually up. Let me actually switch to the year to date one. Year to date, we're actually up 11.11% now. And the S&P 500 in a total return basis is down 18.60%. Because it's changed since that last live stream. Because it actually performed a little bit better. Because I think I was up year to date 9 point something% by that point. So we're pushed up a lot. Not a lot, but a decent amount of percentage points more recently. Let's see here. All right, so credit land, appreciate it. If you were to lose 1 foot of coastal land a year and have a reasonable expectation this to continue, would you then? I think it's still like we're writing off. We're not really depreciating. But yeah, I mean, the effect should be the same. Oh, bacon memes is now like, oh my God, yes, there's a way to do it. Yeah, we can write it off, the value. But let's see here. I don't know if there's another stock that we wanted to cover. Well, I did say ENRON FRAUD, FTX, Meta. 1 foot of land sounds like an amortized limo. Yeah. What is the other stock? PERI, we were talking about them. Disney, we already talked about Disney. Tesla. Yeah, Tesla's actually the other one I wanted to cover just very briefly. So Tesla's at $177. It's come down quite nicely for the year. Year to date, it is now down 55.59%. Got cut in half. Crocs is that cheap one that now has performed pretty well. So we have Crocs. Oh, we can also talk about Dropbox. Dropbox is another earnings call we went over as a community. That one was pretty interesting. They've actually been accelerating or doing really well with their share buyback program. That's one that has been positioning itself pretty well for a B2B world in the metaverse. I know buzzword at this point, metaverse. Starbucks. We haven't covered Starbucks in a long time. Let me see what they've been doing. But Starbucks is one that I feel like is holding that hand grenade that no one's appreciating, which is China. Because a lot of the story behind Starbucks is China. So just letting it, you know. Oh, Warner Brothers Discovery was a funny call. That one is also recorded, but I was kind of goofy in that one, so I don't think that one's going on YouTube. But the PERI on networks, if you guys requested to go on YouTube, it'll go on YouTube. But Starbucks Corporation, I'm not comfortable buying it here, even though it's a solid company. I recognize that because I feel like they're holding that metaphorical hand grenade in their hands, and it could just spite them in the future. Going forward, if that were to blow up in their face, I think the pessimism would offer a pretty nice opportunity to actually add a solid company to the portfolio. But we'll see about that. BLK, it was pretty funny. Yeah, shame there was no. Yeah, Fuhat missed on that one. That was sucked. That sucked. Big Pharma Shill, do you mean CVS or BVS? Even as a shareholder, I can admit Warner Bros. Discovery earnings call was pretty bad. Yeah, it was pretty bad. I mean, I don't know, Ricky, did you attend? Ricky, did you attend the earnings call on Discord? I forget if you were there or not. But we all listened to it, and it sounded like Zaslav was pretty defensive about the company. Oh, yeah, you were there. All right, cool. So, yeah, it was pretty defensive overall. We all felt that, it was a bit like he seemed frustrated in his commentary, and he's been dealt a really bad hand. And I know that everyone points out to his pay package being so that it's incentivized, that the stock price goes up, etc. So, yeah, it is what it is. And that doesn't mean anything in reality. It's just, okay, it's nice to have, but doesn't mean that it's going to go up necessarily. Or remember CWH, Camping World. Oh, sorry. I like my speculative stuff. Okay, so you did mean BVS. All right, we'll go over BVS. Bioventus, I think it's a spin out from another company. No, never heard of this one, so I'm going to have a terrible opinion on it. Oh, my God. Are you... This man's trying to shove penny stock, biotech's penny stocks on us. Big Pharma shill. Yeah, you're living up to the name there. Why don't you shill like actual Big Pharma? You know, like maybe AbbVie, maybe some Pfizer, maybe some, I don't know, throw some spice in there, some Vertex, some Biogen, some Regeneron's. Regeneron's been performing really well. Yeah, you know who Big Pharma shill is. Big Pharma shill loves biotech. Loves biotech in the community. Trying to think of a... I mean, Vertex Pharmaceuticals has done really well. How's Bristol Myers been doing? I know Eli Lilly is still priced for perfection. I missed the earnings PERI, though. Wish there was a notification for calls on Discord. Well, Ricky, you can just ask right now, and I'll post it for you. Even though you might be the only one who watches it, I'll post it for you. You just say the word. I just need one confirm, and I'll do it. You can tell I want to do it. I just need confirmation. Have you seen Amgen? Yeah, that's when I was just... thanks, Dad. Well, that's still not a yes, so I don't know what to do. I confirm. All right, I'll do it for you tonight. Amgen stole my ARWR royalties. Oh, because they're in a little bit of a spat with them, yeah. Confirmation given, do it. All right, I'll do it tonight. Eli Lilly's overvalued, I know. But Bristol Myers, oh wow, how did I say it that way? Bristol Myers Squibb, done pretty well since we talked about a long time ago in the portfolio. Not in my portfolio, but it was briefly, but we got out of it, and people are like, "Oh, is it a bad stock?" No, it was a good stock. Cardinal Health was the one we bought, or we plowed that money into, and it done really well. Cardinal Health, I think, kept going up after I sold. Oh my God, it's at $80. Yeah, so here's a egg on my face. It continued to go up another $10. Absolutely ridiculous. That's insane. Phenomenal. All right. But still very happy with the returns we made. Very happy. But yeah. All right. So with that being said, I think that's where we're going to be closing off here. It's been nice. In the future, by the way, live streams, I want... Oh, yeah, there's a non-financial one that... oh, my gosh. Best burger at BurgerFi. But in the future... Okay, no, we can talk about BurgerFi. Wait, no. What's the best burger at BurgerFi? Okay. No, I can answer that question. I thought you were asking about the stock. Honestly, I saw your picture, and that was a very disappointing version of it. So... it's the CEO burger is the best one, or the swag burger. Those are my two favorite, and you just had a very bad looking one, but I hope the taste was at least good. I think I saw the taste was good, but no, those are the favorites. Chad Lenzer, been super busy and haven't had the chance to watch your previous live stream, but really hope you had a I'm not leaving moment like towards the end of Wolf of Wall Street. Oh, no. Oh, no, I'm definitely not leaving. So good thing you're asking. But the gist of it is I personally am going through a strategic change in my portfolio. And in an effort to kind of both remain with a clear mind and also understanding, let's say, no matter what I say, there will be someone who, looks at my portfolio and just copies me. And if I'm wrong, then, I don't want to have to think about that. So I'm making a strategic change where I'm basically allocating a lot more capital to my high conviction plays. And in that live stream, I recommend you can go check it out, or I can just show you here live again if you so request it. I showed that it wasn't anything to do with what some other YouTuber might be doing. Like, for example, it's not a Sven Carlin moment. And in fact, the performance has been pretty solid in the portfolio thus far. Like I said, I just reiterated. But if you want me to actually right now get a brand new fresh screenshot, I can do that. But performance this year has been about 11.11%. Let me actually pull up the rest of the stats. And over the past, aggregating all the portfolios with the oldest and newest ones together, and it's excluding one holding company portfolio, but that's the Capital Mindset one. It has performed 68.88%, from the time period of November 22, 2019 to November 8, 2022. During that same time period, the total return of the S&P has been 29.38%. So, and again, like year to date, while the market is down 18.60%, the portfolio is up 11.11%. So we've actually achieved really good, solid outperformance in this year. It was during the clown market that actually the performance was more in line, slightly above the S&P, but it was a clown market. So there's that. And actually, that was like the ones where it just nothing made sense. What else? What else? Have generally good feeling about healthcare stocks in this environment. Yeah, well, I'm on the fence whether or not I sell my AbbVie, but I don't know. I've been destroyed. I mean, I already sold my Cardinal Health, so that's one health stock that's gone. It was depressing. It was a depressing CEO. It looked like if burgers were CEOs. It looked like Zaslav in a bat. Yeah. Yeah, don't think that that's how they all are. Are you still not touching anything in China? Well, Big Pharma shill. Remember back when the portfolio update videos were a thing, which was not that long ago, you could see that I had Baba and Prosus, but because of the video that I posted in December. So I don't seriously touch things in China, right? Those are two positions that if you go watch that video in December, posted early December, it has a really weird, funky thumbnail. It's about an hour and 30 minutes long. Go towards the end. I explain why I went in there. But no, I think they're not worth less, but they're as close as you get to worthless, as I said in all these older videos. So good question, but no, that my thoughts haven't changed on that. Okay, so MasterCard versus Visa or HD versus Low, which pair is bigger difference between each other? If I'm being honest, HD and Lows, because MasterCard and Visa, I feel like have very similar capital allocations, very similar business model, extremely similar business model. HD and Lows are similar in that, but they'll be different in other respects. They'll be different in their strategies or strategic focuses. Well, similar with MasterCard and Visa, but I feel like Visa and MasterCard are closer in their strategic focuses rather than Lowe's and Home Depot. Like Lowe's and Home Depot, one will focus maybe more on improving certain aspects or certain qualities that are consumer facing than the other. They could have, different changes to real estate and out. Like there's so many other, I think, moving parts in those two companies that, there would be a bigger difference between the two. Because also the capital allocation strategies of Lowe's and Home Depot have been kind of different of how they go about it. Lowe's has been aggressively buying back stock, I believe, and Home Depot's been more strategic. I think Home Depot has the more pristine balance sheet right now. I could be wrong. And then MasterCard and Visa have been just buying back stock because there's nothing really else to plow money into. Tractor Supply getting no love. That's also true. Tractor Supply is another one. Dan loves that one. Examining the assets. The after party probably would be great. What after party? What is going on? Dan, West, and Rue. What after party is going on here? You guys planning an after party? Is there another live stream after this? Oh, the Rick's earnings call. Oh my God. All right, when is that? We got to schedule that for a community. We got to do a community earnings call for that one. Absolutely, at Rick's. Oh, at Rick's. Well, I don't know about that. But we can do it definitely in like the VC or something. Rick hosts one at NYC Rick's. Okay, if we all owned enough shares and they invited us as a group to it, that'd be funny. That'd be funny. And they go like, oh, we're going to have an earnings call, a shareholders meeting. Where? New York City at one of Rick's establishments. That would be just funny for the laughs. Hostile takeover. Exactly. Have you seen the CEO? The CEO is like a young Chad. I think you were the one who sent me the photo, Julius. It's actually it's so funny. And it's been such a good performer, by the way. So this joke of a company, or not a joke of a company, very solid company, but a joke in our eyes up until it just absolutely destroyed everything, was Rick Hospitality. So what industry do you want more exposure to, but still too expensive? I'm waiting patiently on LVMH. Expensive, but I would love more exposure to. the hyperscalers for sure. Right now, the hyperscalers, which is Microsoft, Alphabet, Amazon. But honestly, your pick of LVMH, a lot of these luxury retail companies, these gems in Europe, they're pretty good. Juvedan is another one. And its various competitors across the world. There's some yogurt companies that always trade expensive as well. Like culture, they're more like culture companies. Bacterial culture for the yogurts. Okay, so December 13th, market down. We're doing it. We're not going to New York this time, but you know, I don't know. Maybe one day we go as a community. So, all right. With that being said, guys, I'm gonna wrap this up. It's been a solid live stream. Barring any question that comes in the last 5 seconds, I'll answer that one and I'll head out. If it didn't go month, I would go. Yeah, I know. If I didn't have the month end, yeah, dang. All right, man. I will see you guys on the next one. And thank you guys so much for coming on to the Capital Mindset live stream. It's been a good one. We've been on for how long? 2 hours and 58 minutes. The 3-hour mark. We made it again. We haven't done one of these in a while. 3 hours, guys. 3 hours. It's been quite a ride, so to speak. All right, with that being said, I'll leave you guys off with the classic send-off. And yeah.
We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks. Yeah.